We came into this year saying there's going to be a slowdown, and that's what you're seeing.
People are bearish now, and that's a big change from 6 months ago.
I think now the market is saying, well, the Fed may be overdoing it, and therefore they may not be able to hike much above neutral.
We have a lot of uncertainty as to what the path of that inflation will be.
We're hoping that there won't be crashes, but hard landings, I think, are inevitable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on Bloomberg Radio, Bloomberg Television, worldwide. The hills are alive with the sound of decent weather. Perfect weather here on our final day at these meetings of the World Economic Forum. The clouds may be parting, but I'm sorry, the gloom sustains in Davos.
Yeah, and it's very much the nature of conversations talking about the war in Ukraine as well as the lockdowns in China, but also a series of reports out of companies that really have projected downward their sales, whether it's NVIDIA, whether it's exporting goods, all of these different companies. How much does that really color the narrative?
We're going to frame for you the next 2 days here from Switzerland, and then we will be in London tomorrow, but with a very much market-centric analysis. Steve Off to join us later on the equity market. And what we're really doing here is looking at the calendar. I believe, do we have a holiday on Monday?
We do have a holiday.
Am I off on Monday? Am I off?
Yeah. Tom, you're off tomorrow.
Off.
You know what? Actually, most people in Europe are off today. So if you're in Europe and you're watching
Why
us,
aren't
I'm
we
sorry.
off today?
Yeah, well, here we are. So I will say that possibly is why markets are so calm today. But it's a notable shift after so much tumult over the past few weeks.
And what's important here, before you go to the brief of what we're going to try to accomplish today, what's so important is we're so upside down, we don't realize it's the end of May. We're 1 month away from mid-year. We've got the jobs report coming out. I'm going to guess it's next week. I don't even know, to be honest.
It's next week. You're doing great.
But we're going to get a look at those PMI numbers that John Ferro thinks are so important, and we're going to really be able to get a first assessment before ECB meeting and then on to the Fed meeting.
We already got an assessment. This week we got data that was disappointing, and that gave basically a green light to have people ratchet back their expectations for the Fed, and frankly to ratchet back expectations for the longer term. I just wonder whether people are perhaps overly complacent and overly perhaps confident that the Fed can orchestrate something very gentle, which seems to be a growing consensus right now.
Just one statistic as we get to the brief here and a look at the data, and that is simply the VIX coming in 30 to a 28 handle.
Yeah.
It's, that's how desperate we are. We're looking for little tea leaves like that. Brief us here because I have no idea what's going on.
We're going to be looking at U.S. Initial jobless claims at 8:30 a.m. We also get first quarter GDP readings, but really I am focused on those jobless claims, as I know many others in the market are, trying to get a sense of how we gauge this labor market. How much momentum is there? We have seen a slight tick up, and I emphasize slight there because we have seen that, but still claims are near record lows, which does not give any sign of a loosening up of a very tight labor market. 10 a.m. This is going to be interesting. U.S. pending home sales for April. Earlier this week on Tuesday, we got new home sales that came in absolutely terribly below all estimates, absolutely plunging. And that really indicated to a lot of people a slowing in the market, which is basically completely on the heels of a 5% mortgage rate. And at 1 p.m., I'm doing this just for you, Tom. The Treasury is planning to sell $42 billion of 7-year notes. It matters. I want to know whether the Japanese investors come in.
Are you kidding me?
What?
Why a 7-year note? What's special about 7-year note besides it's the fondue belly of the curve?
Honestly, because it's always dramatic. It's always the one that goes wrong.
Really?
It's always the one that goes right. Seriously.
I did not know
because
this,
there's not as much liquidity and there isn't as deep.
Notes.
Oh yeah, I'm sure he's taking notes right now.
7 years is important.
Yeah, exactly. It's important, and it's good to know the marginal investors that come in there.
This is going to be an interesting set of hours before we go off to London, and wrapped around this are the two panels that I've done here at the World Economic Forum, and I really want to say, more than any year I've been here, they've done a great job of finding experts synthesizing the tensions of their narrow fields. This morning, Sir Lawrence Friedman with me, truly expert on war. We spoke of the giant Thomas Schelling as well, and maybe someone. We spoke to the finance minister of Malaysia about the unique challenges there. Synthesizing all this at any given bank are people like Marvin Lowe. He's senior global macro strategist at State Street, and he's the one reading and listening to what the experts here are saying to come up with a market view. Marvin, good morning. How have you changed your market view given the set of crises of this May?
Yeah, I mean, certainly we've had a lot to deal with and a lot to understand ultimately. I think that we've been kind of in the camp that the tightening that we've seen in financial conditions and really synthesizing kind of this different inflation ramp, if you will, was going to evolve the way it has. So we're starting to see a slowing. We know the consumer is tapped, and we're starting to see that substitution and a pullback in spending. Kind of having said that, the inflation story and probably I think for me more important, the job story is still something in flux, and we can consolidate around the fact that things are evolving the way we think they're going to evolve. But having said that, until we get a better sense on inflation and jobs, we're going to be fragile.
Which is the reason why, frankly, Marvin, I wonder about the complacency in markets that the Fed is going to back away from raising rates starting perhaps in September, the Raphael Bostic view of things. Do you think that this sort of narrative, which has gained increasing clout on Wall Street, has gotten a little ahead of itself?
You know what? It's not as if we've rallied a lot on stocks, right? It's not as if risk assets all of a sudden have recaptured half of the losses that they've experienced since the beginning of the year. So it's not euphoria. The fact that we could actually pin to a transmission mechanism that is potentially working in terms of slowing the economy is a reason to take a pause. Whether or not you believe that all of a sudden the rate hike process is going to end in July after the next 50 basis points is probably premature in my mind. There's a lot of wood to chop between now and the fall when we get a sense as to how much of the froth that's in the jobs market, how much of this kind of inflation discussion that's starting to spread is actually going to pull back as the consumer pulls back.
Marvin, how boring is the market until next Friday when we get that jobs report?
I don't think we have a lot of data. I mean, the jobs numbers is certainly the most important within the tier one data at this point. I think all of us are tired, so maybe we'll take this as a moment to consolidate. But those choppy days based on an earnings release is still going to keep the market kind of jumping, if you will, and to a certain degree that volatility can spike back. Right. For 40 is probably off the cards until we get a better sense of whether or not what we're seeing is a sustainable trend. But we've got to keep on our toes for sure.
Marvin, State Street has been a leader in analyzing and questioning traditional asset allocation. And of course, the classic is 60% equities, 40% bonds. Boy, it's been ugly. I don't mean it's been ugly for State Street, but for the industry. Is the 60-40 certitude dead?
You know what? I don't think so. Certainly everyone was overweight equities coming into, or I guess somewhere in the middle of last year, and it ultimately made sense. Kind of those asset allocation tables have pulled back on that equity allocation component. But where it goes is the question as we kind of obviously adjust things. Something that Lisa's gonna love is that when we look at the reverse repo facility, for instance, at $2 trillion, people are retrenching from.
I think we've got some technical difficulties here on the 47 connections we've got between Switzerland and Boston and New York. Marvin Lowe, thank you so much for joining us. With State Street, Lisa, to me, this is absolutely critical. You've got the equity downturn. You've got the bond downturn. You're better at this than I am, but I'm going to pick IG. IG is not down 5%. IG is down 12%, depending how you look at it. And if you've got the portfolio because you read a book, you've been hammered.
Well, you've been hammered, but actually people are starting to come back. And we saw one of the biggest rallies in credit yesterday in a long time because people are starting to think perhaps we're seeing some sort of capitulation by the Fed already, that the tightening in financial conditions have achieved enough for them that they will pause in September.
Wait a minute. Is it a good thing that bond prices go up? This is like cosmic, folks. It's like the kind of conversation you'd have at 2 a.m. at your last corporate party of the evening. Let's go there, Lisa.
Okay.
Is it a good thing for all if bond prices go up, yields go down? Or does that mean gloom because the world's coming to an end?
Okay. honestly, right now, there are two ways to actually thread this needle. On one hand, people want financial conditions to remain tight because if they don't, the Fed's going to go harder core, right? They're going to be more aggressive. So things can't really move too much. You can't see too much of a rally in risk assets or else the Fed will be more aggressive. On the flip side, if you get some sort of stability, that might give people a sense that we're not heading toward the hard landing that a lot of people are worried about, and we're still going to be in this sort of low inflation regime after perhaps 2024. So honestly, I mean, your eyes are glazing over, I'm sure, but these are sort of the
Brian
things.
Moynihan's when you're telling him about this. I mean, let's go to the banker at Bank of America.
Yeah.
I'm going to say this without question. Bank of America was the most visible bank here at Davos in this odd meeting of May. They said, we're going to be here, we're going to be visible, which I give them credit for. And the answer here is Moynihan said he's not playing the parlor game.
No.
He's just trying to run a bank.
And he's looking at the consumer, which still looks strong and is a blessing and a curse. I think the biggest takeaway from this Davos.
Why?
No. Yes, no, it's true.
If you sobered up from last night,
I'm not sure.
Why is it a curse that the consumer's doing better?
Because then the Fed has to go harder in order to actually unravel this particular economic momentum. How do you deal with a labor market this tight? How do you deal with consumers that keep spending? How do you deal with the fact that there's no obvious way to slow inflation unless you tighten things up and actually increase the unemployment rate? These are the dilemma that people are looking at. And that's, I think, why it's a good thing and a bad thing.
Seriously, as Mr. Lowe said, and this moves forward to your study this weekend and into the analysis next week, I'm with Lowe. It's about jobs. Hatzius at Goldman Sachs is heated about this, that you got to watch the job dynamics to figure out the rate dynamics.
Even Brian Moynihan of Bank of America said that what he's watching is claims, what he's watching is jobs, because that will determine how much trajectory.
Ethan Harris's job? I mean, is that?
I'm guessing he's good. I don't know. I'm just by hunch. I'm guessing
he's good. You think Harris's job is secure?
I don't know. You want to spread a rumor?
We got a better tape. The 20 futures up 12. Dollar giving it away a little bit. A euro 107.18. Perfect weather here in Davos. Stay with us here on an eventful Thursday. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Reshaping. The Federal Reserve saw that aggressively raising rates would leave them with more flexibility if needed. That's according to minutes of this month's policymakers meeting. Fed officials agreed that they needed to raise rates in half-point steps the next two meetings. The massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between the Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. And in the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise in the cost of living. Chancellor of the Exchequer Rishi Sunak will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies. The ability to open up society with low levels of death has kept Norway on top of the Bloomberg COVID resilience ranking for a third month. A 91% vaccination rate in adults has helped the Norwegians keep their fatality rate low. Ireland came in second in May, whilst Denmark overtook the United Arab Emirates for third. The UK is in 14th place, whilst the US is in 31st out of 53 countries scored. Russia finished in last. And Apple is taking a conservative stance when it comes to building iPhones this year. Bloomberg's learned the company is asking suppliers to assemble roughly 220 million of the devices in 2022. That's about the same as last year. The mobile phone industry has gone off to a difficult start to the year, and production estimates are down across the board. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
I think as long as we stay the course on tightening, which I think we will through the summer, the dollar's going to do fine. But if the Fed blinks because of financial panic, which I think there's a high probability of toward the second half of the year, then I think that the dollar will come under pressure.
Scott Minerd with Guggenheim, thrilled he was with us yesterday. And of course, we led that with crypto. As many of you noticed, Mr. Minerd making worldwide headlines, looking for a move from 30,000 down to 8,000. And some of you reminded me with love notes. Lisa gets the love notes. I get the hate mail. Thank you.
We got equal
for that
this time around.
But I got the hate mail yesterday to remind everyone that Mr. Minard was gung-ho to 400,000. The nuance that I heard yesterday was Minard looks for a southiness to Bitcoin before an uppiness. He didn't say up to 400,000, but he looks for some form of recovery.
Well, he said that it broke through a certain level that he had actually thought would be a buy point, and then he looked at the fundamentals and he looked at the ecosystem and said, what? Where's the buy here?
Oh, we had 28 people watching at that time, and I got 32 love notes, so we thank you for the repeat performance. Right now, and yes, it is Happy Valley, but pear-colored by all going on in the United States of America, and seeing the horrific news and beginning analysis of this tragedy in Texas, we go to Washington and our Anne-Marie Horton. Anne-Marie, the image that I see is, I'm going to use first names here, Beto speaking to the governor. There seems to be a modest outrage in Texas over Texas politics. How will that play out in the coming days?
Right, that was a feisty exchange, and then he was escorted out. This is Beto O'Rourke, who wants to replace that Governor Abbott. It's going to be a tricky situation in Texas because we talked about yesterday the fact that there's an NRA convention, you know, just a 4-hour drive of where this massacre of children at this elementary school occurred. And this town is really reeling from what is going on. You're hearing now a little bit more about the teachers, about the children, their parents. It's obviously incredibly devastating. And then in Washington, of course, this all comes to the politics. And the president, again, spoke about this tragedy. He'll be making his way with the First Lady to Texas. But he says he's sick and tired of it, and he wants change. And the place they're at now is potentially, Tom, these red flag laws, maybe as a starting point for legislation.
Somebody at the NRA, the National Rifle Association, is going to stand up, Anne-Marie, and say, well, we use 5-shot Remington 22s to squirrel shoot in the woods, so therefore we need to leave all guns alone. Anne-Marie, what is Washington going to do with what I believe is 5 magazines of 30 rounds of assault rifle ammunition?
At the moment, Tom, nothing. There has not been a ban on assault weapons since that expired in 2004. And it depends really who you ask in Washington on what the strategy should be going forward. There's wide support in the public on making sure that there's stronger legislation for background checks. But when you talk to Republicans, they really say a lot of it has to do with mental health issues. When you speak to Democrats, they say that, and the president yesterday said that we should not be giving AR-15s and assault weapons to 18-year-olds. This should not be allowed. They should not be able to purchase this. So you can see there's clear, obvious, and there has been for years and decades, legislation they really worked hard to try to pass after, even on a bipartisan line, but it was blocked by Republicans after Sandy Hook. But there's potentially this red flag laws for that to be expanded. 19 states and D.C. has it. And basically that means a parent, an officer can go to the court, and then the court could say that this individual is not stable enough to own a gun, or we need to take that gun away.
Anne-Marie, how much political oxygen is there left to deal with this particular issue, which has been a hot button and long-running issue, versus some of the economic challenges that really are dominating the polls?
Well, I think right now there's a lot of outrage in America that there is another mass shooting, and this one was at an elementary school. So legislatures have to respond to that, right? They're getting phone calls. There's a lot of outrage. I know you're in Davos, but there is a lot of outrage you can see even on the social media networks, et cetera. So they are going to discuss this. Steny Hoyer, the House Majority Leader, said when they come back, the House from recess, they are going to discuss this red flag law proposal. But you have the Senate breaking for recess. So there isn't this impetus to get, pen to paper immediately to pass some sort of legislation. And then when it comes to the economic issues, of course, this is something the Republicans are going to really want to pivot now going into the midterms, because, the Democrats are going to want to use this tragedy, as the president said, and try to turn that into action. They're also going to want to use the potential overturning of Roe v. Wade, which we might be getting in June. They're going to want to use that to galvanize Democrats to come out and vote. But the economic issues, that is where the Republicans are really going to lean into.
When is Biden going to Texas?
We don't know the exact dates yet, but he did say that he'll be going there with the First Lady at some point. I mean, today is Thursday, so it does seem like this would be either tomorrow or a weekend trip. This is just for him to console parents and to show his support. For President Biden, this is something, losing a child is something deeply personal. He obviously lost his son, Beau, in his adult life, but he also lost a baby daughter when she was just very young. So this is something that is deeply personal to the president. And the First Lady yesterday was also asked about, and she said, of course we're going there.
Emery, thank you so much. Emery Horton in Washington. What I do here, Lisa, that I think is so important is to get away from the horrific headlines that we see and just go out and take a random X number of days to figure out how fast we get to the sum of individual shootings that sum up to these horrific shootings. And it's shocking, alluding to what Beto O'Rourke said last night, how quickly we get to further horror that's never reported.
And how it's normalized. How the shock fades, how the shock is different than the Columbine shootings because this has been an event that has been repeated, and how that's something that we're now talking about, that there's always a lot of talk and outrage, but nothing gets done. How do you change that?
Maybe it's outside our remit. I'll leave it to David Weston and Balance of Power and the great work Joe Matthew's doing. But, can I ask a dumb question? Why is this so rare in Europe? Granted, they do have shootings in Europe. I take that point. Versus the repetitive nature of it in America. To me, that's an incredibly important question.
I look forward to hearing what Joe Matthew and David Weston have to say about this. There are a lot of schools of thought, and I will say they are tough interviews. I will say over in Europe, the focus very much has been the horrors and the atrocities going on in Ukraine and how that dovetails into a new energy policy, how that dovetails into a new democratic unity. And that, I think, is a notable theme at a time when there's a lot on the plate, but this is a different kind of threat to Europe.
It was interesting to see, and in the panels that I've had here at the World Economic Forum, how people immediately linked this war in Ukraine into the food inflation we're seeing in the United States. Some countries fairly successful like Malaysia, but others really having a tough go with it, with a lift in wheat and the lift in rice as well. Please stay with us. The Euro 107, I think we can get home. Steve Auth will be with us on the equity markets. This is Bloomberg. Good morning, everyone, from the World Economic Forum meetings in Davos, Switzerland, on a perfect Swiss day here, nestled up against Austria and Italy. Lisa Abramowicz and Tom Keene. John Ferro is on assignment. We look forward to seeing him. Do we see him Monday?
Tuesday. We're off Monday. We just went over that. It's a holiday. It's Memorial Day. You'll be working. What will you be working on? He'll be doing his carpentry.
I'll be doing my reading.
Yeah, okay.
I'll be reading in. But anyways, we'll have John Ferro, I believe, with us on Tuesday, which is a good and beautiful thing. Lots to talk about. We're going to do the equity market here. If you are in any form of equity investments, what we're going to do here in 3 minutes is must listen. But right now, in New York, a look at the markets. Kaylee Lines.
Well, Tom, not a lot of conviction in the equity market this morning. Futures have been fluctuating between gains and losses. At the moment, S&P futures up about 6 points, 39.82 where we trade, but NASDAQ futures are lagging behind due to a few individual names I will get to in a moment. In the bond market, we come in on the 10-year yield again, 2 basis points lower to 272. And in foreign exchange, it is the Russian ruble that catches my eye today after the Russian central bank cut rates for the third time in just over a month from 14% to 11%, a larger cut than expected, really trying to rein in the strength of the ruble that has gone from strength to strength over the course of the war in Ukraine, even in the face of sanctions, in part due to capital controls. But now a ruble right around 62.74. Strength is starting to cause some concern for Russian policymakers. As for a few of those individual tech names I was talking about that were creating a drag on the broader market this morning, Apple is one of them, down about 1.4%. A Bloomberg scoop out overnight saying they will keep production flat this year for iPhones. 220 million units is what they're looking at as they deal with some supply side challenges. And of course, NVIDIA, the chip maker, also dealing with issues on the supply side, specifically stemming from COVID-19. That renders them unable to keep up with demand. That stock down 5.2%. As a result, Snowflake, the cloud software company, also giving a disappointing sales forecast. It's down a whopping 14.5%. The one more positive tech story out there this morning is Twitter. Elon Musk getting rid of that $6.25 billion margin loan, instead $33.5 billion worth of equity financing for that deal. Twitter shares up about 5.5%, but 39.20 guys still far below that 54.20 offer price.
Interesting. Katie Lyons, thank you so much. And I must admit, Mr. Musk, a source of conversation here at Davos. Yeah. Our most important equity conversation of the day. Stephen Auth has decades of experience as the chief investment officer for equities at Federated Hermes. He understands how to participate in the equity market in a difficult moment. Steve Auth, I want you to discern having cash and having a little cash, like 4%, 7%, dare I say 10% of a portfolio, versus the emotion of being all in cash amid crisis.
Well, being all in cash implies you've got a really good crystal ball, Tom. And in this environment, I challenge anyone to have a perfect one. I mean, this is probably one of the more unusual environments here where even we who often have a kind of base case, there's probably two base cases here. And, you guys have been talking about them all week. It's, are we going to be in a recession or are we going to be in a rocky landing, maybe soft landing? But I think soft landing is kind of off the table. We're thinking more rocky landing or crash landing. We're on the rocky landing side of it. But I think you want to stay diversified here. We're saying stay defensive. We are holding cash instead of bonds and aggressive growth stocks as an offset. But on the other side of that, we are definitely long defensive dividend-paying stocks. They broadly participate in the economy. And, I think this is an environment where people have talked about in the past, economic slowdowns and earnings recessions. I think this time around, we may be looking at an economic recession, but an earnings slowdown on a nominal, because earnings are nominal, they're not real.
Yeah. Well, Steve, and we'll get into that in a minute, but I want to just hone in on something that you said that's so important. You said basically a soft landing is off the table. It's going to be rocky. Has that already been priced in, or do we have more to go?
I think we're lurching towards pricing in. I put out a note last night, Lisa, saying we think, if you fully price in a rocky landing, doing the numbers on nominal earnings and a fair valuation with probably a 3% 10-year yield, which is where we think we're kind of going to be semi-permanently for the next several years. I don't think inflation comes off, but it doesn't go away. So if you put that all together, you're probably looking at a fair value on the S&P between 3,400 and 3,800. And it kind of depends on it's more about the stocks underneath that than the yield. But so we think we're closing in on somewhere near a near-term bottom here. We're staying defensive, but we're getting ready to get a little more aggressive if we can see levels flood.
I'm sorry, folks. Worldwide, I think we can state that Steve Auth has taken the Bramo Kool-Aid. And I mean, I'm sorry, Lisa, he's sort of got the... He's got the Bramo energy going.
Yeah, he's got the sort of depressing, gloomy view of the world.
This is not appropriate, Steve.
Well, Steve, this is actually important, and it's important, and of course I think so. Okay, well, being in Camp Lisa, I will say that it's not just about where we are, it's about how bad the recession will be. And that's... Well, that's going to be later tonight when we have a drink. But I do wonder whether we are looking at possibly, yes, a hard landing, but that actually means a softer recession that gives people conviction in the short term. Is that twisted, or does that sound right?
Well, I think a hard landing is just hard to get, Lisa, because the banking system is way too strong. So you're not going to have a big banking crisis that could cause it. We've got so many job openings. We're already seeing it. Instead of seeing layoffs, what we're seeing is slowdowns in hirings. And we've got a lot of slowdown in hirings to go before we can get job openings to be anywhere near job applicants. So it seems like there's a lot of room for steam to come out of the economy before you start getting big cutbacks. Even the consumer still has piles of cash. They're going to slow buying, but the idea of them actually stopping buying and causing a recession seems unlikely. So we're more really into the rocky landing camp than a recession. I think recession's just tough to get now anyway.
Steve Auth, could we get the nominal GDP call wrong? If we have an inflation size and a real GDP, actual growth size, can we get a better nominal GDP that cushions the Authian gloom?
Well, I wouldn't call it gloom, Tom. I mean, That's kind of where we are. Like we've cut yesterday we cut our GDP forecast for this year to 2.6. We cut our forecast for next year, real GDP, to 1.6. So rocky landing. But nominal GDP, we've got it 7 and 5 the next 2 years. And I think that's probably conservative. That kind of gives the Fed a lot of credit for getting inflation at least down to 3 or 4%. So you add that up, and if you have companies that broadly participate in the overall economy, a lot of these defensive areas like telecom, consumer staples, utilities, they're going to grow their revenue base on a nominal basis, mid-high single digits. And yeah, they can have some margin compression, but it's really hard to actually get an earnings decrease off of that.
Okay, folks, it's Thursday in May. You've blown up your portfolio. It's now time for Auth 101. Steve Auth, explain the dividend growth trap of how you're a pig and you go out and you buy a 4, 5, 6% dividend, and that's not dividend growth.
Yeah, I mean, you can, you really got to be, I don't want to advertise my own products or anything, Tom, but I think you want to let a professional help you on picking dividend growth products, because some of them can be absolute death traps. And the high yield is just an indicator that the price is about to plummet because the dividend is unsafe. So if you're in dividend investing, you've got to spend all of your time focusing on the company's future and can it continue to hold and expand that dividend payment? And that's easier said than done. So you really want to focus on that. You can't just buy a yield and assume that's attractive, because some yields are indicators of some bad things to come.
Steve, how do you deal with the fact that the likes of NVIDIA, the likes of some of the biggest, most successful companies have been coming out and downgrading their forecasts for the year because not of an issue of demand, but supply, the fact that they're having disruptions and they're having to deal with supply chain issues that they were not prepared for? You're seeing the shares absolutely plummet after you see some of these forecasts. How do you shift? How do you know when to actually be a buyer?
Well, first of all, we're digging in pretty hard to these earnings announcements. On NVIDIA, Lisa, as an example, I mean, bring it up, but our read on that, going through it carefully, is the real problem there is the stay-at-home trades ending. And NVIDIA is almost 50% exposed to stay-at-home in the sense of gaming chips, et cetera. Yeah. And that's the part of the market where things are really coming off the boil. So. Apple, you could argue supply chain issues perhaps, or Dick's maybe. But, on NVIDIA, I kind of take exception with you on that one. I think that's is in fact a problem with these stay-at-home stocks, that people over-extrapolated just how far they can grow. And unfortunately, they placed a multiple on that doesn't make any sense. Yeah. And so with the Fed raising rates, you've got that working against you, and you've got, the economy lurching back towards normal. It's not going to be good for the NVIDIAs of this world. Right.
Steve Auth, you can take exception with Lisa anytime you want to. Thank you, Mr. Auth. He's with Federated Hermes with some really great perspective on the equity markets. I just got in an email from Al from New Jersey. He says, why are you looking at your cell phone? And on radio, we go to camera, we go to wide, so we can see the hills are alive with Sound of Music. And, when you're looking off, and Lisa's like sitting here being Lisa, like an adult, and I'm looking at my phone. I'm just checking out that the Red Sox are playing 465 baseball.
I thought you were scheduling Vet Bill's haircut. I thought that might be what was going on. You're checking out Red Sox?
No, Kennelfie needs a haircut.
Okay, sorry.
But I also note here the Yankees are playing 7:05 ball. I'm not coming home until the Yankees play some 600 baseball. They need to lose 3 in a row.
Honestly, I'm with you. Being a Mets fan,
I know. We're not coming home until the Yankees lose 3 in a row. That's all there is to it.
Especially if it's nice.
Coming up, must watch. Listen, she's wonderful. Amrita Sen on $115 a barrel oil. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Singapore's president is warning against isolating China. He spoke after President Biden visited Asia for a series of summits that excluded Beijing. Lee said, if US-China relations continue on this path, it will lead to further splitting of supply chains or worse. He said it's far better for China's economy to be integrated. Brazil's President Jair Bolsonaro said he and President Biden will have their first one-on-one meeting next month. Bolsonaro told CNN Brazil he will try to reset the relationship with the US at their meeting next month in Los Angeles. Bolsonaro is coming to the US for a regional summit. In Texas, companies will effectively have to take a vow of neutrality if the latest school shooting sets off a debate over gun control. Otherwise, they run the risk of losing business with state agencies. A law that took effect last year is aimed at protecting the gun industry from discrimination, similar to laws used to protect people from racism or other forms of prejudice. And Russia has cut interest rates for the third time in a little over a month. The central bank is hoping to stem a rally in the ruble and slashed its benchmark from 14% to 11%. Despite the sweeping sanctions imposed on Russia, the ruble has soared to the highest levels since 2018. Surging exports and capital controls have hit demand for foreign exchange. And Apple is responding to a tight labor market and the spread of unionization efforts in its retail stores. The company is raising salaries for workers in the US by 10% or more. Minimum hourly pay for Apple staff will be bumped to at least $22. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The reality of the supply chain situation, though, is that every company, every electronics company is having to redesign for geographic resiliency within the design of your products, redundancy, different designs, security, and I mean that's what we're going to be embarking on. Everyone's doing right now, and it's going to take, another year or two.
Like Bob Uecker, he's in the front row. Chuck Robbins, always in the front row for Tar Heels basketball, the mathematician from the University of North Carolina. And Lisa, Chuck Robbins of Cisco had some really sterile math there about, what was it, 8 parts to 4 million parts in one Cisco thing?
Yeah, how much they have to rearrange and fortify their supply chains.
I learned a lot.
And honestly, he also is trying to figure out how much inefficiency is built in as a sort of prerequisite of being just in time in the modern world. He also was talking about scope and scale, and we were looking at how much some of them are going to have to achieve that in order to manage through this period.
He said some of his supply issues are solved by moving on private jets, part 54672, from point A to point B.
Which shows where we are in terms of some of the supply chain disruptions, that's more efficient than just simply not having that part at all.
The good news is Chuck Robbins can borrow Elon Musk's fleet of jets. Joining us now, Alex Webb, expert on the Muskian Twitter saga as well. Days of our Musk, we call it. Alex Webb on Twitter, can you just give me an update? I'm lost in Switzerland.
So Elon is no longer going to be leaning on a margin loan from Tesla, at least according to the most recent disclosure. That means that he is going to have to pony up more in equity. That stands at, I think, about $33 billion now. He's got $7 billion or so in commitments from private equity firms and Larry Ellison, amongst others. It does beg the question. There have been whispers that he might try to renegotiate, even though he's tied to this deal and there's a big breakup fee if he doesn't make it happen. That if he has to find a huge amount of equity and social media stocks are down significantly, as they are, he might then try to renegotiate.
So the shares are up, Alex, in pre-market trading, but they're still far below that 54.20 mark that really was the ultimate pitch. How much disbelief is there sort of baked in? Why are people still so skeptical?
Well, not least because Elon has said multiple times himself that he may not be able to do this deal, and he's been begging loads of questions, particularly about bots. Matt Levine did a very good piece recently in which he said that this seems to be a bit of a red herring. It's a straw man that he can beat if he wants to try to renegotiate. It seems as though he does want to do the deal in some form, and that's perhaps why the stock is up a little bit today. If he didn't want to do the deal at all, he wouldn't be rearranging his financing options, and so that's the indication that perhaps people are taking.
Alex, review with me. Everyone I spoke to thought $54 was a gift, take the money and run, and then we come down from there. Where does take the money and run end? What's that emotion? 50, 45, 40, or is it souther?
I mean, it could go a lot further south. If you look at the valuation multiples for these, based on their forward earnings projections, pre-deal, Twitter was trading about 50 times forward earnings. That meant that there was a lot of expectation built into where the earnings was going to grow. So the idea that even if Elon had a special source that could turbocharge them, maybe that would just bring it in line with where the market's expectations already were. You're seeing Facebook, which trades at about 15 times forward earnings. Of course, it is a lot more mature. It is a lot bigger. You could therefore draw a line anywhere between that 15 times and 50 times multiple and take your pick. Twitter is a far, far smaller company. That does give it headroom, but it also has far fewer users. So, you know, you could go quite low. It depends what the current management can tell in terms of an equity story, in terms of what they think they can do.
Alex, days of our Musk are very interesting. They're always an interesting saga, and that's the reason why we all prognosticate on them. How much is this a sideshow to what we see going on with Apple and some of the other big tech companies that are actually ratcheting back their production forecasts and targets because they just can't get the parts?
Yeah, it's always worth remembering. Twitter is a small company. Twitter's, revenue is about the same size as BT's, or British Telecom's profit. Apple is almost, well, it's down now, but it's a multi-trillion-dollar company. And so the small problems that Apple might have, and in reality they probably are quite small problems around the edges, they will cause fluctuations in earnings that are greater than Twitter's entire revenue. So it's meaningful if you take it in isolation, but in the big picture, it's probably not enough to cause big problems.
Alex Webb, you're such a pro. I'm going to catch you unawares here on the tragic shootings, plural, in Texas. Alex, you are truly expert at this. Given what the little bit I've read, should social media and Facebook try to limit these troubled people out on social media, gaining support from other troubled people?
The effect of social media has really been that where you might have, people with extreme thoughts in isolation in a whole bunch of different locations, now those people can find common ground because they're unified, without being unified geographically, and that clearly creates an issue. Does it solve the gun issue? No. This idea that actually it's to do with social media and it's to do with people being dragged to the extremes, yes, that's an issue, but I'm sorry, if they didn't have guns, it wouldn't be an issue at all. I don't want to get too political on that front. There are things that the social media platforms can do in terms of, ensuring people don't get pulled towards the fringes, but they haven't on the whole done it, and it takes a huge amount of effort and financial resources, which they have no particular incentive to dedicate, at least when it comes to their accountability to shareholders.
Well said, Alex Webb. Thank you so much for that perspective, always from London today. And of course, we'll be in London tomorrow, migrating back to, you said it's Tuesday.
Tuesday, yes. Tuesday. Monday you have off, or you're going to still be working, you said.
I'm never off.
Yeah, you're going to be working on your car.
I don't know what to make of Twitter. I mean, everybody here is wired into Twitter 24/7. We can all state it's a teensweens company, right?
It's a teensweens
company. But
it's
got a huge wallop.
It's also the issue that you talked about, right? What is the role of social media as the town crier, as the town hall, where people come and talk about what they believe, and how much should it be opened up? How much does free speech really mean? Anyone should be able to say whatever they want. And I think that that's sort of the political argument and backdrop for why it was so interesting. Yeah. On a broader level, though, it's buyer's remorse, right? It's days of our Musk saying, wow, that was a way high price, and I actually want to get it back down, and no one's going to actually give me the financing that I'd like. And oh, by the way, it's also bringing down Tesla.
Well, yes, and there are two moving parts here, Twitter and the Tesla story, but this is more common than you would believe, except his top tick first quote of 54, I believe it was. Everyone who's an adult in the industry tells me that was an extremely rich number.
Well, that's the reason why the board just said, sure. You expected some sort of pushback. You expected some competing offers. They just said, great. And now the issue is getting it done. I just wonder, from a regulatory standpoint, is he buying and selling while things are fluctuating so much?
Are we doing the real yield in London for John Ferro tomorrow?
I don't think so.
That's like 8 p.m. I think, or something.
Are we doing our scheduling here? Is that what you're doing on your phone?
No, I'm just trying to figure it out because we haven't talked enough about the real yield, and we're going to do it right now.
Yeah.
What's the significance of the one we never talk about, which is the 5-year inflation-adjusted yield is big time still negative.
It is. It was like negative 0.2%. I actually was looking at it this morning. I am excited. This is giving a lot of risk appetite still out there. So I do think it's interesting. Yes, of course I'm a bond geek. Is this a surprise to you at all?
No, I don't know. Barry fell off a stool at the piano bar last night when Abramowicz went into bond chat. From Davos. Stay with us. Bonds next.
We came into this year saying there's going to be a slowdown, and that's what you're seeing.
People are bearish now, and that's a big change from 6 months ago.
I think now the market is saying, well, the Fed may be overdoing it, and therefore they may not be able to hike much above neutral.
We have a lot of uncertainty as to what the path of that inflation will be.
We're hoping that there won't be crashes, but hard landings, I think, are inevitable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television from the World Economic Forum in Davos, Switzerland, the 51st year for the WEF, and they've announced January meetings in the dead of winter. We're going to see it in 7 months.
Despite all of the people decrying the fact that they'll be slipping all into the ice, that seems to be perhaps a better time. It is an eventful moment, and we've gotten a slew of corporate news amid this corporate executive gathering as people meet with policymakers, and it really paints a bifurcated picture for the U.S. economy and, frankly, for the world.
Get that in a moment with Macy's doing really well, but Lisa, to that point is the recession guess. And what I hear is a lot of pros saying you can't guess a recession.
And that, frankly, the data just isn't supporting it, although where is key. Perhaps not a recession in the U.S., perhaps a little bit more pessimistic when it comes to Europe and other regions. But still, we are seeing people spending. And that's what we saw with Macy's. I think this is actually a really big deal. They came out and they boosted their expectation for the year. Yeah, across the board. And why? The why is interesting, I think. It's basically people are charging things more on their credit cards and they're buying things for weddings and beyond.
We heard that from Michelle Meyer at MasterCard as well. And far more important to me is this debate, and it's percolating and not a big deal, but nevertheless, it will be a big deal for your weekend reading and into June. And that is a study of the path of nominal GDP. And when I saw those headlines, Lisa, 14% as well, and then you've got a forward view of 12% comp sales and such. That's a nominal GDP on fire for the consumer.
Basically, another way of saying this is inflation isn't necessarily bad if the consumer is still spending at pace with inflation. And frankly, it will look a lot better for these companies, Macy's among them. And what you're seeing is people are coming in. They're actually going out to events. Those shares up nearly 12% now after ahead of the open, after their earnings forecast increase. And honestly, at what point do we take a look at this and say we can't get a recession if people are still charging everything on their Amexes and really going out to parties?
Are you looking at me, moi? Right, keeper of the Amex knows I'm not doing it. Theoretically speaking, let me ask the dumb question of the morning. We do this early, 7 o'clock Wall Street time. Why is Target so grim and Macy's so good?
And it's the same story, frankly, with Dollar General that came out. But basically,
they did a Target?
They did a bit more of a Target, downgrading their forecast, but they haven't been punished to the same degree. But honestly, it has to do with where you supply your parts, and it has to be of the composition of the things that you sell. And that's what we saw with Target and Walmart. And perhaps Macy's had a pretty bit more basic mix of clothes, and people are buying them to go places.
Maybe a lift to the market off of what's going on at the land of the wooden escalator. Futures up 17, Dow futures up 143, NASDAQ up a fractional 0.2%, up 24 points. I'm reading this off the Bloomberg terminal on my iPhone. This revolutionized Wall Street, folks. BitDog is down at a 29,000, even 10-year yield. Not giving me a story, 2.73%. How am I doing, Lisa?
You're just checking the Red Sox.
115, and the Red Sox are still playing 465 baseball. What are we going to do this morning before we dash to the airport?
We've got a lot of actually interesting data coming out. 8:30 a.m. we get U.S. initial jobless claims, which is going to be very important. Even Brian Moynihan of Bank of America said you've got to watch jobless claims. You have to watch whether the labor market is loosening up, and you're going to start seeing a tick up in the unemployment rate. We have seen a little bit of a shift with an increase in claims, but it's infinitesimal.
It's a toxic brew of labor
No, I'm not
statistics.
making this more dramatic than it is. 10 a.m. though, this to me could be the harbinger of more potential pain in the housing market. We've seen it so far in the volume of sales. We haven't seen it in the prices. U.S. pending home sales for April will come out. We saw new home sales on Tuesday come in well below expectations. Do you see a repeat of that kind of feeling? And at 1 p.m., Tom, you'll be on the edge of your seat. $42 billion of 7-year notes sold by the Treasury Department. And honestly, I am interested in this because this is always a disaster auction. And I want to see who comes in and buys it, in particular, the Japanese investor base.
I'm going to be doing that circle, folks, you do east of London when you got to wait 3 hours to get into Heathrow. That's what I'm going to be doing. I'm going to be riveted to the 7-year auction.
I'm sure you will.
Somewhere. I'm going to be looking down at Charles Dickens' family home. Yeah. Charles, how about that 7-year auction?
The hand motions are
I got to go back to housing.
Radio. Yeah, please
Can I just state that, you know, fancy suits, fancy bow ties, you're in Chanel today. Guess what, folks? 50% of renters in New York City use 50% of their income to pay their rent. That's appalling. New York Times had that yesterday.
The scary part about that is that has been a long-standing New York City issue. Now it's becoming an American issue. And you're seeing that, and frankly, the more prices continue to go up, and frankly, the fact that housing supply is not coming back on, rents are going to keep climbing even if you get a plateauing in the housing market. And that, I think, is what has a lot of people concerned about where the momentum is right now.
If you're part of Global Wall Street, this is the Bond Nerd interview of the day, a conversation with Ian Lingen, head of U.S. rate strategy, BMO Capital Markets. Ian, I want you to go to liquidity, to the fluidity of the market out there. Give us a report on the slushing of the money given $2 trillion in the repo space.
Well, Tom, I think that you're right. There is a lot of money that's still out in the front end of the market moving around. That $2 trillion in the RRP is really distorting what we're seeing in bill rates, and it has changed the pricing in the front end of the market, and it has people concerned about the overall functioning of the Treasury market in the near term. But at the end of the day, it's still the most liquid bond market in the world. And as Lisa pointed out, we do have a pretty significant 7-year auction this afternoon that we're expecting will provide a good barometer of the willingness of investors to underwrite the deficit. Now, all else being equal, the recession commentary that has been making the rounds really is defining the direction of overall rates. We saw 10-year yields peak at 320. We're now down to 275. The curve, 2s, 10s, at 25 basis points, give or take. We really are moving beyond the initial stages.
I mean, this is amazing. Is Ian Lingen one of the people that cares about the auction?
He is. There are a lot of people who do. I even got letters saying thank you for telling Tom that the 7-year auction matters. But Ian, this is important because you actually are reconfirming the lower for longer kind of thesis. As you look out to some sort of slowdown, how much pushback do you get at a time when we don't know if Japan's going to come in? We don't know if China's going to come in. And frankly, we don't know if the banks are going to come in the same kind of way that siren is coming into our broadcast.
So I think that what we've actually seen over the course of the last 2 weeks are early indications that Japan is coming back into the market. If you look at the MOF data, we've got about $7 billion worth of buying in overseas notes and bonds. Now that follows a stretch of 16 weeks where there was about $75 billion of selling. So still an early process of getting Japan back re-engaged in the overall global bond market, but pretty solid sign that I expect will continue over the course of the next several months, because there is this sense of yield FOMO, as it were, looking back at 3.2% in 10s, that I expect will become defining as the summer plays out.
So, Ian, and not to play the parlor game that I know Tom absolutely despises of what the Fed officials will or won't do, but do you think that there's any sense between what Fed Chair Jay Powell said about not being nuanced about inflation and taking a pretty hard tone, and what we heard with Raphael Bostic that seems to be driving the narrative of the moment, which is they'll move 50 next 2 meetings, and then after that, they'll stop?
Well, I do think the Fed has done a good job of signaling that they are more committed to fighting inflation than perhaps the perception was when the cycle started. But I think the bigger debate is one about where is neutral monetary policy? And the way that we're thinking about it is we won't know it when we get there, but we'll know it when we've passed it. And that's why people are so worried about the wobbles in the equity market and what that means for financial conditions. Because if Powell overshoots, we are going to see a material slowdown, and that is going to lead to another recalibration of forward expectations for monetary policy. And that's why we're not at 350 tens, but we're close to 250.
Ian Lincoln, thank you so much for joining us today of BMO Capital Markets. The siren, and you hear the siren here, and I look because I'm a sucker for the European siren. I think they just had a Jason Bourne sighting in the valley.
Well, then
I think that's why we're hearing more sirens.
I think that we'll get on our bikes after this and we'll go check it out.
This is a large transaction. We're not going to turn this into a tech discussion. We'll let our pros do that on Bloomberg Intelligence. But anytime the number $61 billion comes by, it gets your attention.
We're talking about Broadcom and the purchase of VMware, which is coming out as we do hear more about consolidation in the tech shares and on tech space. And I gotta say, they have so much cash. What are they going to be doing with it right now, given the fact that they are looking at still a growing economy in the longer term and still a transition to the tech industry?
This is really important, folks, and I hearken back to Microsoft and Activision, which are sort of, and I'm speaking total amateur. Activision was like, yeah, we're doing business in Microsoft, and Microsoft said, we like this, we'll bring in whatever the politics was. And maybe the same thing here, but what does it say about next year, given the tech turmoil that we have?
Well, there's some people who think that it will actually allow more sales because of what Chuck Robbins was saying yesterday,
right, where I wanted to go, yeah.
Where he basically was saying, look, for so long, these founders had so much hubris, I'm using my words, not his, and thought that their values were so high that they wouldn't sell. Yeah. Now they might be starting to get willing to sell.
But we're never going to have Robbins on again, folks. He said they got a list of 30 companies they're looking at Cisco, and he refused to give us a single name.
He almost did, and then he looked at us like, are you kidding?
Yeah, we almost got it out of him. Very important. Look for our technology coverage across Bloomberg Intelligence on VMware and Broadcom. Futures up 25. Please stay with us. Always an important conversation. Jeffrey Yu, BNY Mellon.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A huge transaction in the tech industry. Broadcom has agreed to buy cloud computing software company VMware. The price, about $61 billion in cash and stock. VMware created the market for a type of software that lets businesses run corporate networks more efficiently. In China, Premier Li Keqiang warned of dire consequences if officials don't move decisively to prevent the economy from getting worse. Li told thousands of local officials a contraction in the second quarter must be avoided. His comments were more candid than the official read out but published by government media. And Apple is taking a conservative stance when it comes to building iPhones this year. Bloomberg's learned the company is asking suppliers to assemble roughly 220 million of the devices in 2022. That's about the same as last year. The mobile phone industry has gotten off to a difficult start to the year, and production estimates are down across the board. And the massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. And in the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise of cost of living. Chancellor of the Exchequer Rishi Sunak will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Sweden is in a different position. We don't have a dependence on Russian oil or gas. We have a 100% fossil-free energy system in Sweden, but we get affected anyway because of the joint pricing system in Europe, so the prices are very high.
Good morning, everyone. For the meetings of the World Economic Forum in Davos, Switzerland, Lisa Abramowicz and Tom Keene. Jonathan Ferro is off this week. Thrilled you're with us here on our first perfect day in Switzerland. We've had torrential rains. We've had clouds,
Hurricanes.
and then we had the hurricane. We had the hurricane the first day as well. It's really beautiful. You get why people come here in the summer.
I'm telling you, I grew up reading Heidi, and I understand now the fragrant flowers and the fields of grass, and I could go on and on.
We could go on and on. You can go up. The lifts are going. You can go up and go Valder, all that, and there it is. It's been a very successful odd spring meeting here in Davos, Switzerland. Right now, Anne-Marie Horton with us, and we're going to reset here on what's not being discussed in a China-free Davos, and that is Wither China. Anne-Marie Horton, our Washington correspondent, on finally, Mr. Blinken will give a speech on China. Anne-Marie, describe the finally as we hear this speech today.
Well, this has come from months of negotiations, right? 16 months they've been talking about this China policy, and then the speech long awaited because Secretary Blinken had got COVID. So this is something that many China watchers have been waiting to hear, but there's not going to be anything too bold in this speech. It's likely going to just talk about a lot of issues and the strategies the U.S. is already using when it comes to China. So one, they're going to emphasize strategy at home. How do we make innovation better in America, boost democracy in America? Two, strengthen allies. The president just got back from a trip in Asia. And then finally, making sure they can compete with China economically and militarily. But there's not going to be something new and bold that they've been hiding from us over the past year and a half.
But Anne-Marie, how much has the conversation shifted as we hear from Premier Li coming out and really downgrading the economic expectation for China, talking about an unemployment rate there near record highs? How does that shift the conversation from the U.S. standpoint?
I think the U.S. still sees long-term, though, as China being this mega powerhouse in the economy that they need to compete with, even though obviously this COVID-0 policy and what you're seeing in China right now in terms of the economics due to that is hindering their growth. Long-term, the United States certainly sees China as the region, the country they need to compete with in the Indo-Pacific. And also, Secretary Blinken today is going to make that point. Even though there's been a lot of time and energy in this administration used towards making sure that they are focused on Ukraine, they want to make sure that they are communicating that they are still very much focused on what is going on in the Indo-Pacific and in China. What happens after this is going to be interesting because a lot of capitals in Asia are going to be focused on this. And when we heard from Singapore, what they're saying is we don't want a bifurcated economic policy. And the premier is saying if the U.S. and China continue on this path, potentially we get there. And they want more integration of China. We did not see that on the president's trip.
Yeah, but the dominant factor here, Anne-Marie, is this is one of the few, we're all on the same page, views of Congress. Does Mr. Blinken adjust his speech and his strategy based on China or based on Congress?
Well, Congress hasn't changed in terms of wanting to talk tough on China, but there is some notable, interesting developments happening in Washington, D.C. The president on his trip said that when he comes back to the White House, he's going to sit down with Treasury Secretary Yellen and look at these tariffs, right? Because a lot of economists are saying if you want to get inflation down, which is their #1 domestic issue, one way of doing it is potentially to lift these tariffs. But now you have a bipartisan letter signed by Elizabeth Warren, as well as the likes of Mitt Romney and Bob Portman, saying do not do that. They'll hurt American workers, and it'll also show China that we cannot sustain weak pain for a longer-term policy. But you're really not going to hear anything different from Antony Blinken today, Tom. But what you maybe, if you want to loop in what he might say about Congress, is this White House really wants Congress to pass that CHIPS Act. That's about the strategy of innovation at home.
Anne-Marie, to get off script here as we end our time here in Davos, once again, America didn't show up. The Secretary of Commerce is here, Gina Raimondo. Maybe there's a few others I haven't seen. But I want you to explain, Anne-Marie, the reticence of any government of the United States of America to show up to engage the global conversation in Davos. Why are Republicans, why are Democrats reticent to do that?
Well, I know also climate envoy John Kerry was there, Tom, because you had an interview with him. But you're right. There has been just low numbers than we've seen in the past. American presidents really don't want to go to Davos. This is very much seen as an elite club for the rich and powerful. And how does that track with domestic policies? Now, whether or not it's this administration or a prior administration, every president is dealing with some sort of domestic issue. And I think this administration knows that that would look poorly on the president to be hobnobbing with the rich and elite in this tiny Swiss mountain town that is very difficult to get to when he's dealing with higher gasoline prices and higher grocery bills at home.
See that? You see that?
You know what, honestly,
if 4 other cabinet members are gone, we would have dragged Anne-Marie here, but we don't.
Okay, but in all honesty, Anne-Marie has a point, right? I mean, this is probably one of the reasons why it has gotten under so much scrutiny, but there is a self-awareness here of that. And frankly, it seems like people are less trying to prescribe solutions and more trying to actually just have meetings and figure out things behind the scenes.
And Anne-Marie, one thing I've learned here with the pandemic is we're all learning to be social again. I mean, everybody knows I have no social life, so it's not a big deal. But
I'm sure
Anne-Marie,
you spent all your nights at the piano bar.
I did, but Anne-Marie, what's important here is on international relations, everybody's got to run into each other. Right. And we don't see, what are they doing, mowing the lawn at the White House?
Well, here we've got sirens, there they've got mowing along. Anne-Marie, thank you so much for taking the time.
Anne-Marie, get a rake and rake up the grass.
Before we talk about her blazers.
The funniest noise here, it wasn't the sheep. I mean, the Simon and Will Kennedy goat farm is important. And the sheep aren't out today. They're in being cool. I think Dalio underwrote the barn that the goats and sheep are in. The funniest thing, you got to admit, was John Kerry. And the helicopter came overhead, literally, folks, right above us, and stayed there because they're doing a photo shoot. And, John Kerry's being very John Kerry and very...
One more time.
John Kerry's being very John Kerry. And we actually got a smile when I told him it was the GOP helicopter.
That's true. He did smile.
We got the annual Kerry smile.
I got to say, the irony, though, of talking about climate change and having helicopters whirring above us. Again, all of this is not lost. It's a very self-aware Davos where people want to get things done.
Full disclosure, we will be at the Zurich airport, and you look out on amber waves of Gulf streams. They will all be there. Please stay with us for the meetings of the World Economic Forum. We're here. Brent near 115 a barrel. An update from Amrita Sen on radio and television. This is Bloomberg. Bloomberg surveillance from Davos, Switzerland. Lisa Abramowicz and Tom Keene, John Ferro on assignment. We've got a busy half hour. Let's get right to it. In New York, Kaylee Lines.
Well, Tom, the picture is looking better for futures. We're right around session highs at the moment, up about 32 points on S&P E-minis, and the NASDAQ 100 futures are actually higher by a little more than 0.5%, even after some of the disappointing headlines coming from the likes of NVIDIA and Apple. In the bond market, we are seeing yields moving up now. A little bit of selling pressure in treasuries, up about 2 basis points on the 10-year. 276 is where we trade. Yields, of course, were lower earlier in the session, but as the sentiment gets a little bit more firmly risk on, you are seeing no bid in the bond market. And finally, in foreign exchange, it is the Russian ruble that really catches our attention today. The Russian central bank cutting interest rates for the third time in a little over a month by a larger than expected amount. Economists thought about a 2 percentage point cut. 3 percentage points is what we got, 14% down to 11%. They are trying to weaken the Russian ruble, whose strength has become a little bit more alarming. Right now, that Russian ruble is indeed weaker, trading at 63.20 or so to the dollar. But of course, there's a lot moving beneath the surface on the micro stories. So let's get over to Romain Bostic with some individual names.
Yeah, well, Kelly, a lot of that micro story centers around the retailers. And guess what? It's actually looking pretty good. Remember, we had kind of a mixed picture out of the retailers last week. This week, it's been a little bit more upbeat. Macy's shares up about 15%. This after raising its guidance for the full year. Those comp sales on a year-over-year basis came in at about 12%, and the company is expecting that momentum to continue as it's seeing a big shift to occasion apparel. The idea here that a lot of us are going back out of the house to fancy events, and we need fancy clothes, of course, to do that. In the meantime, we're still stocking on stuff, up on stuff for our homes. Williams-Sonoma up about 8%. They knocked it out of the park. Comp sales were up 9%. The street was only looking for 3% growth there, so triple what the street was looking for. And Dollar General, which of course services the lower income end of the spectrum, those shares up 11% after its comp sales came in at about 4%, and the guidance also seemed to be above the average of street estimates. So that's the setup on the retailer front here. The other big question for the day, at least on the macro basis, goes back to some of those tech names. You're seeing a mixed picture there. NVIDIA did come out with earnings last night here. They weren't bad. They were talking about 46% growth year over year. Unfortunately, this was a company that was growing in the triple digits just last year. Those shares down about 4%. Meanwhile, the big deal that really wasn't much of a secret, Broadcom agreeing to buy VMware. It's an interesting deal. The shares are only up about 1%, with most of the gains in the stock already being baked in, up about 40% since we first started to learn about those rumors. But they've now confirmed that they have struck a deal, $61 billion deal, going to be one of the biggest tech deals that we've seen in quite some time. And Twitter shares up about 5%, Tom, on the back of that amended 13D out of Elon Musk that suggests he's still maybe potentially going forward with this deal.
Romain Bostic, thank you so much. More on the equity markets and particularly the good markets of the moment on the close this afternoon. Futures are up nicely. The 30-year bond ticks above 3%, which is one of those measurements, and I'm waiting for the VIX with a 27 handle. We're not there. We are also waiting for history to repeat itself, and we are seeing that now with the Chancellor of the Exchequer of the United Kingdom. Lisa, you've got a better grasp on the headlines than I do, but back to the 70s, maybe back to the 80s, Mr. Sunak is going after big oil.
Yeah, Rishi Sunak is saying that he wants a temporary levy of 25% on oil and gas profits, basically saying it will be phased out when profits return to normal. That's what he said. He also said the more a company invests, the less tax they will pay. It will expect to be used, the proceeds, to help adjust the cost of living for people in the lower income tiers. But this comes as energy prices absolutely surge. I know John's talked a lot about that, and people are seeing their bills double in the pace of a year. How do they deal with that at a time of inflation in so many other categories as well?
Up to the east coast of Scotland to Aberdeen, this is an exceptionally sensitive issue, and it's not the same geography as America, but you have to wonder, Lisa, does it follow on to the United States?
Yeah, how much does this basically open the door to some sort of tax on profits of oil and gas companies? It's definitely been something talked about in the United States. How do you then justify that at a time where you're trying to encourage investment, but also transition away from fossil fuels?
And for those of you on radio, it is the well-dressed and always perfectly coiffed Sunak, and behind him, I will not mince words, and I wish John Ferro was here to help us. It's an exhausted Prime Minister of the United Kingdom. If you're not up on the story, it's called Partygate. If you're not up on the reality, I don't understand it. John Ferro's expert on it, but I can suggest the Prime Minister of the United Kingdom looks exhausted.
Yeah, well, basically, this is all about holding a party when everybody else was in lockdown, not able to see their families during holiday, and how they deal with that. And it seems like he is very much in a beleaguered state.
We get to rip up the script and do that with Amrita Sen, Chief Oil Analyst at Energy Aspects, truly excellent on the microeconomics of what Brent crude will do. Amrita, in your academic studies, do windfall profit taxes work?
No, and especially not at a time when you're asking oil producers to also raise production, right? Because there is a bit of a supply crunch. So no, the answer is no.
I go back, Amrita, to Lyndon Baines Johnson and the idea of an investment tax credit. Now, Sunak is going to fold in here. If you invest, you don't pay as much tax. What kind of investment program spurs oil production?
The problem right now is that, we do need investment for sure. And to your question, what kind of investment spurs oil production? You're talking about investment in the North Sea. And that is not overnight. You are going to still look for, or you need to first and foremost find the oil. But again, you can, there are small fields that can still be extracted, and you can get some tieback projects, which are pretty quick. So say within a year, you could get oil out. But these are small volumes you're talking about, maybe 40, 50,000 barrels per day rather than hundreds of thousands of barrels per day, which is what we'll need. If anything, we probably need in the millions of barrels per day. For that, you need a sustained investment program. And, particularly the UK North Sea is a declining asset. Norway, on the other hand, actually has much better prospects. So it's not that lucrative to necessarily invest. But having said that, there are still assets which oil majors over here could extract oil from. And if the tax incentive is right, I think the world needs that oil, and they would be more than keen to develop that, except, of course, that there are ESG pressures on them as well. So that is always going to be the tension, whether shareholders necessarily want them to invest in oil and gas, regardless of the tax structure.
Amrita, how much is this an issue of getting the oil out of the ground, and how much is this an issue of refining it so that people can use it to power their cars and their homes?
Well, it's a great question because we've got shortages in both right now. Of course, we're not investing enough in the upstream. That's been a trend for the last 8 years. In fact, on our database, we've not invested much more than $400 billion each year for the last pretty much 8 years. And since last year, China changed its policy around refining and product exports, and we've closed about 3 million barrels per day of refineries in the West, mostly in the West. So we are very short of refining capacity. We have a few refineries starting up in the next couple of years and even back half of this year, but not nearly enough to meet demand. So we are constrained on both sides, but right here, right now, I'd say we are more constrained on refineries. So the oil you and I would consume, that's more constrained than actually the crude oil side of things, which in itself is a challenge with OPEC spare capacity low.
Amrita, all of this comes together in a toxic brew, if you will, that only raises costs for consumers and continues to do so despite wobbles in the actual crude market. How much, I understand that perhaps we're not going to see oil companies produce more as a result of the tax that's being proposed in the United Kingdom. However, how much does it just give cash to be able to offset the costs for people who are going to only see those costs climb?
The challenge is going to be how are you going to make this a global solution, right? Because oil markets are global. And I think part of the problem politicians in the West have is that they're always trying to come up with local solutions. Even the US is talking about potentially limiting diesel exports. That's just not going to work because ultimately both crude and products markets are very, very global. So we have to acknowledge that oil and gas demand continue to grow very, very sharply, particularly in Asia. And even, right now, China is not even growing. So imagine when China does come out of its zero COVID policy, the impact it's going to have. And we need to therefore facilitate enough investment across the board, not just in oil and gas, but also in renewables to meet that energy demand. Otherwise, like you say, there is only going to be one thing, that the cost goes up. It is pretty simple demand and supply.
Amrita, an unfair question, and this goes back to 1980. And the experience of the United States in a, quote, windfall profit tax, which many people would suggest was just a flat-on excise tax over the already elevated taxes they were already paying because they were making more money. Amrita Sen, if the United States affects a British equivalent in a windfall profits tax, what does that do to a gallon of gas?
Well, I'll say this much. I think at least producers we speak to in the US have said the administration has considered it and probably still is. You will see US shale production fall because, again, what's the incentive? Much like in the UK, what's the incentive in the US to continue producing if you're just going to be taxed? And if that happens, then crude prices go up even further. Yeah. Refining was already constrained. So, gasoline prices are already high. And of course, it's going to make matters worse. But the crude price will definitely rise.
Amrita, 20 seconds. Where is gas prices? Where are they going to go in the United States through the remainder of this year?
We think it's going to continue to go higher. You've got Memorial Day driving season and it's starting up. And yes, inflation is high, but this is the first time in a couple of years where there are no restrictions and people are going to be driving and flying as well. So both gasoline and jet fuel prices will continue to rise.
Amrita Sen, thank you so much for joining us with Energy Aspects. Memorial Day, is that the Monday day we have off?
That's the day that you're supposedly off on Monday, that you're going to be working, polishing your car, reading in. I will say that, honestly, this is the issue, and you just saw gasoline inventories come in lower than expected right ahead of that driving season, which is the reason why people are looking for the prices just to go up.
I need a VW Rabbit diesel. That'll solve it. VW Rabbit diesel straight into Bentley.
To load your car up with diesel? it costs like $100 each time you fill it up.
Good point. Good point. You win. Back then, diesel was cheaper. Figure that out.
Yeah.
Coming up, Michael Feroli, JP Morgan.
Keeping you up to date with news from around the world with the first word, I'm Reshaping. It's one of the biggest technology deals of all time. Broadcom agreed to buy cloud computing company VMware for about $61 billion. The transaction represents about a 44% premium to VMware's valuation before May 20th. That was the last trading day before Bloomberg reported potential takeover talks. The UK will impose a so-called windfall tax on the profits of oil and gas companies. The money will be used to help fund at least $6.3 billion of support for Britain's facing a cost of living crisis. Chancellor of the Exchequer Rishi Sunak told the House of Commons a 25% tax will be targeted and temporary. And today, Secretary of State Antony Blinken will deliver a long-awaited speech outlining U.S. strategy towards China. But there's unlikely to be any bold new direction unveiled. Instead, Blinken will explain existing policies. The U.S. strategy includes investing in democracy and innovation at home, bolstering allies and competing with China on military and economic issues. And Alibaba reported better than expected 9% rise in revenue on the March quarter. Chinese consumers turned to online malls for basic needs during COVID lockdowns. Alibaba is a barometer for consumer sentiment because of its dominance in Asia's largest retail arena. The company is grappling with intensifying competition and mounting economic uncertainty at home. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
I think government bonds probably feel less volatile from here rather than credit. But it is still quite a challenging environment. And I think we've probably got another 2 quarters at least of volatility as we see the sort of economic backdrop gradually ease a little bit. And then we'll be looking towards the 4th quarter maybe to see a little more clarity.
Ann Richards of Fidelity International, one of my favorite people at Davos, someone who really has a grasp of the dynamics of global Wall Street. Great to speak to Lynn Martin of the New York Stock Exchange the other day. I think of Loretta Mester at the Cleveland Fed. Math wins, and Ann Richards is the best of global Wall Street in mathematics as well. He knows the math of Macy's, and it's up. Omar Saad joins us right now, analyst at Evercore ISI, on a very good day for Macy's. Omar, what's the difference between Macy's doing well and Target doing less than well?
Good morning from halfway around the earth. Thanks for having me, guys. Great question, Tom. I think this is really important, actually. A lot of people look at the numbers coming out of retail recently, Amazon, Walmart, Target, and understandably get worried about a consumer recession, especially with all the inflation going on. But I actually think something different, a little bit different is happening. I think we're reverting to the mean. I think you're seeing a lot of those pandemic winning categories, winning franchises start to give some of those gains back. And some of those categories and retailers that really struggled during the pandemic for obvious reasons, such as Nordstrom and Macy's, you're seeing consumers return to those stores and return to those categories, such as dressing up to go out. So I think we're seeing more of a spending shift and a consumer behavior pattern shift than necessarily early signs of a recession.
The word moonshot is not part of what your research department wants you to use. The fact is Macy's has been a moonshot off the pandemic mat, but also over the last number of years, there's been a real doubt about the strategic execution of their management. Is this as good as it gets for Macy's?
Yeah, this is the ultimate question. Clearly they're having a very strong earnings pattern. The biggest change from history right now is the reduction in promotions. And there's 2 factors driving this. And really the ultimate question of what the profitability levels of a company like Macy's will be in the new normal world. Their margins are way up because promotions are way down. And this is partially due to supply chain constraints and solid demand. As all these companies and retailers pulled back on inventory and demand is rebounding faster than supply. But it's also due to a lot of data and analytics and a lot of technological advancements these companies can apply to their inventory planning especially on an omni-channel basis when they've begun to look at their customer, not just an online customer versus an in-store customer. It's one customer and one inventory pool for both channels. And these have been step function changes for companies like Macy's as well to better plan their inventory, which means less markdowns and potentially longer tail to these strong margins that they've been experiencing.
So basically, much more efficiency. How efficient is it to see the consumer levering up in a massive way? And we are seeing that, and particularly these earnings in the forecast, where they basically said a lot of their outperformance or expected outperformance this year stems from the use of credit cards.
Yeah, that's actually an interesting new development. Credit card revenue share for retailers like Macy's has been way down because, as you know, consumers have been carrying much lower balances and been paying off their balances during COVID because of all of the savings. So Macy's, this is the first quarter they've started to see it. We haven't heard much from other companies seeing a huge increase in credit card revenues, i.e. carrying balances. But there is a sign, this is the first kind of sign that you're seeing that balances return. I don't necessarily think that means the consumer's under a super amount of stress, especially since you haven't really had a full credit cycle. However, we are seeing that lower end consumer, probably the one who's starting to build some balances, behave a little bit differently as we cycle stimulus. So early signs, but to me, it's not something to panic about. You know, having lived through 2008, 2009, this is a tiny, tiny amount of credit compared to that previous cycle. So I don't think we'll ever get as far out of hand as last time either.
Perhaps this is not anything to get that concerned about, but perhaps this is something that indicates that even if wages start to increase at a slower pace, even if you start to get inflation outpace and continue to outpace those wages in a meaningful way, that you'll see more and more plugging of that gap with credit, right? I mean, how much could that prolong the cycle for only more pain later? How much are you actually seeing that versus just, you know, basically people able to spend so with their savings, as Brian Moynihan of Bank of America was saying?
Yeah, I'm more in that camp so far. Now, keep in mind, the stocks we cover are more luxury and fashion and tend to tilt towards a high-end consumer. But even when I talked to TJ Maxx, we were visiting them in their headquarters the other day, they're seeing no resistance to price increases, higher AURs. You know, typically signs you'd see of consumer pressure saying, wait a minute, that's a little bit too rich for my blood. Now, a lot of this is really kind of revenge spending going on after 3 years of being locked up. And the categories I cover tie into travel and experiences. People go shopping. And so there's some strong underlying demand there. But there's just literally no sign of trade down either, which is something we've seen in the past. It's just not happening. If anything, people still seem to want to trade up.
Omar, one of the things I've done in my extensive retail research is kids want vintage clothes. I don't know if you were aware of that, but if it isn't vintage, I won't wear it. How does Macy's and the other, how do they deal with well-mannered children who won't walk in their stores?
So specific, Tom.
Yeah, this is great. Vintage clothes is a great entryway, especially with a lot of those young consumers who really want authentic brands, authentic experiences, and authentic products that have real traceable roots. It's one of the reasons a brand like Air Jordan is doing so well, because they relaunched so many of these shoes with long lineages that go back decades. Yeah. So it's a very strong trend. Now, look, Macy's actually picked up millions of new customers during COVID, and a lot of them were actually young. And this is because you had a lot of young customers who were online searching for fashion, searching for these brands that sell vintage products like Levi's and Ralph Lauren. Yeah. And lo and behold, Macy's is one of the biggest online retailers of these brands. So actually a lot of young consumers discovered Macy's during the pandemic. Right. Now, the actual volume of vintage clothing, Tom, that's out there is relatively limited to the overall supply of new clothing, but it's a great entry point for a lot of these retailers and brands, that younger consumer.
One final question. We got 30 seconds tops. Can you explain Brandy Melville?
Oh, my goodness.
This is a private company. It's not something we're super close to. It attacks that kind of teen, fashion-forward market. It's actually an Italian firm. I don't know a ton about it, Tom, but it does reflect, I think, that desire of the teen consumer as well to return to fashion, return to life, and get dressed up again. And we're not going to be wearing sweats forever.
God. Omar said he is so slick. He nailed that. Omar said, I love busting your chops. Thank you so much. Greatly appreciated this morning. I'm in Italy.
Okay.
And I go by a store, and it's Brandy Melville. It looked like the Vatican. It was so packed.
Let's be honest. You have a personal gripe with Brandy Melville because of personal experience. This theory about all of the vintage clothing, and theoretically, what would you think about Brandy Melville?
Bloomberg surveillance, we stated it is. Brandy Melville is one-size clothes, which means they buy them and they're appropriate, and then they're not. And then you're yelling at them. You can't wear that. That's Brandy Melville.
Boys, so I'm dealing with the Air Jordan resale situation. So we both
Brandy
have our
Melville
own things.
is an outrage.
Okay,
it's
well,
a scandal.
I'm sure everyone's really happy to know.
We're going to get back to the markets. One of our best guests, cross-asset, with Jeffrey Yu, email market strategy, BNY Mellon. We'll do that in a bit. There's a $61 billion merger in tech. Stay with Bloomberg today. This is Bloomberg.
Whenever the Fed starts raising interest rates, the specter of inflation goes from the back burner to the front burner, and people are talking about it.
I think it's a troubled period ahead, and you're going to see social instability.
What you're seeing here is a repricing and a re-rating of the U.S. equity market.
A lot of people are calling for recession. I think recession and recession talk is a little bit premature, too early.
If they want to get inflation down to 2% within 6 months or even 1 year, they're going to have to overdo it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Countdown to the latest read of the U.S. labor market from the World Economic Forum in Davos, Switzerland. This is Bloomberg Surveillance live on television, on radio. Tom Keene, Jonathan Ferro, Lisa Abramowicz. John Ferro's off. We are here broadcasting live on this last day of the conference as people empty out. The gloom is lifting, and we are about to get a read on a labor market that still has steam and is presenting a real conundrum for people looking for gloom.
I think you're dead on that there's been a lot of cross currents here, and all of it comes back to the labor market. And this tea leaf, the weekly data of claims, is critical.
I think it really is what people are looking at a time when they are trying to figure out whether people are exiting the labor market, whether it still has the tightness that it once did. And we're getting that series of possibly brighter forecasts from retailers like Macy's, where people are still spending. How do you cross-tail that into all of the negativity that we're hearing here at Davos and beyond?
Can you talk? Because my throat is gone because of the fondue last night.
Oh, yeah, it's rough.
I hit the 40th piece, and it was just too much.
What was it again? Velveeta?
Could you get me some schnapps over there, please?
Velveeta fondue.
And no tang in Switzerland.
Yeah, exactly.
Come on right out here. You don't have to duck down. Come on, Cyrus.
We have a big crew who are helping us make this happen and bring the interviews. Tom, I think that this has been a really interesting Davos with respect to how gloomy people are about Europe. There is a different tone when it comes to the U.S. The stamina of the labor market and the stamina of the consumer continuing to spend. And frankly, some of the stimulus that a lot of people blame for the inflation also has given a lot of savings a boost, which is giving people a lot of ability to spend.
I mentioned this to a couple central bankers today. I go back to Joe Stiglitz and the small g, the growth rate, and there's an embedded belief here that the United States, whatever happens, will have a better growth rate than so many other regions.
And we'll get into that here in a minute with Jeffrey Yu at BNY Mellon to talk about that disparate potential outcome for Europe and the U.S. Right now, we are seeing a bit of a lift to markets. I'm wondering whether we can actually eke out a weekly gain, Tom, after the longest streak of losses going back to 2001, and what would actually drive that, given that we are seeing some stability in yields. We are seeing.
Over.
Yeah, well, I mean, honestly, people are thinking maybe we're starting to price it a little bit more of a slowdown that will give the Fed more flexibility. With that S&P futures giving a lift up about 0.5%, getting really close to that 4,000 mark, Tom.
You saved me there, Lisa. Thank you so much. What I was choking on is I read Jeffrey Yu's research report, and this is, without question, the most controversial conversation here in Davos. Jeffrey Yu is just brilliant with BNY Mellon. And Jeff Yu, you say they're wrong. All the people doubting Plaza Accord and dollar intervention are wrong. You mentioned the giant Frankel of Harvard, and you say we need to start to think about a Plaza Accord of 2023. Why is the dollar too strong?
Well, the dollar's too strong in terms of valuations, but the U.S. needs to figure this out on its own accord. The dollar itself from the Fed is not really going to matter in terms of financial conditions. You look at the four pillars of financial conditions: rates, exchange rates, spreads, equity markets. FX by a long way ranks last. And also, what does Japan need? What does Europe need? Europe, finally, they're changing their tone. They need a stronger euro to bring down inflation, but they need to realize this actually strengthens consumer sentiment as well and their purchasing power. So this is a very different environment compared to several decades ago. We need to think about not a new Plaza or Louvre or anything like that, but what each country needs for themselves. So that's the difference between now and 3 decades ago.
Let's find common ground between David Folkets-Landau over at a small German bank and Ian Bremmer out with his new book, The Power Crisis, and Every Nation for Itself. Jeff, how do you have coordination if you're not camped out in the lobby of the Plaza in New York?
Well, right now you have enough communication between the central bankers, and we've had that over the last 15 years or so, like the swap lines, during the crisis, during the pandemic. But it's kind of backward-looking. There's coordination when it comes to firefighting, responding to crises. Look at how the sanctions were brought in after the war started. But where is the coordination up ahead in an era of deglobalization? That's the philosophical question we need to ask. If you're talking about deglobalization, then why bother coordinate? Isn't deglobalization by definition every central bank for itself? So philosophically, where do they stand right now? Where do governments stand? There needs to be harmonization. If not, then we can forget about picking up the phone.
Okay, so Jeffrey, if we don't get that harmonization and we stay where we are, which is in maybe perhaps not a deglobalization, but a regionalization of partnerships, how do you see the euro reacting at a time when people are downgrading some of their growth expectations for world growth? And we're starting to see, I don't know, the euro get a little bit of a bounce from that.
So I think Eurozone policymakers, and to their credit, the ECB is starting to realize this. A strong currency need not be a bad thing. There are more things to an economy than a trade surplus. Let's get away from this 17th, 18th century mercantilist way of thinking. I know it's harder for Asia and Euro to dislodge, but if you have stronger purchasing power, that can actually help offset some of the inflation losses to real income as well. So they need to state a stronger euro at this point, and the euro is still going to be undervalued, like even 5 big figures from here, right? So that is good for the Eurozone households. It can lift their demand. In real terms, that's good for the euro. So they need to actually cross that hill. They're not there yet, but finally they are starting to shift. So I think the euro will find a new range, a higher range, but still, even with a higher range right now, it's still going to be very, very much undervalued.
We're talking about fluctuations that are minuscule, at least for this week. But the big elephant in the room at Davos has really been China, Jeffrey, and how we deal with the fact that the slowdown that we're seeing from shutdowns probably are not going to end anytime soon. How do you map that out into a currency call, into a growth call, at a time when it seems as though that is going to remain the policy, at least for the remainder of the year?
Well, what's fascinating is if we look at our iFlow custody data, our clients are starting to buy CNY, they're starting to buy Chinese equities, and after an unbroken run of, let's say, 3 or 4 quarters of selling, gentle buying in Chinese government bonds as well. So it looks like the global markets, they're so underweight China right now, they're not actually taking a growth view. I highly doubt that because of the lockdown still happening. But maybe they're just starting to find some value on a total return basis with Chinese equities, Chinese bonds, and also the currency, where it is. But to translate that from a re-rating, from a growth view, I want to go overweight China again. The window is narrowing, I'm afraid. So we need more stimulus, more government-driven stimulus and demand lift right now. But yesterday's Premier Lee's comments, he said basically, to local governments, you need to fend for yourselves. Right now, there are very limited resources. That's tough.
Dr. Yu, let's turn to your virology expertise, which is if China ends on lockdown, what happens to the greater Pacific Rim? One day it's going to be over, then what?
Right, then we are going to have, not only in an Asian, but probably a global context, the mother of all services stimuluses. And we're talking about not just lockdowns ending, but also borders reopening in China. There's no time frame for that. But look at how Thailand, Indonesia, Malaysia, the ASEAN countries dependent are on Chinese tourists. Davos, Tom, go to the watch shops in Davos, are they complaining about lack of Chinese tourists, buying all those Patek Philippe's, right? So when they return, that $200 billion services deficit China runs with the rest of the world, that is going to be such a big stimulus, something we can all look forward to. But right now, again, no timeline.
Do you think, Jeff, that we're seeing right now, people bake in an appropriate slowdown when we take a look at the global economy, or do you think that there's more to come to be priced into risk assets and, frankly, even to yields?
So on a qualitative basis, I think we need to differentiate what is a slowdown versus, basically soft versus hard landing. I think people are still baking in a soft landing right now, but if the Fed turns restrictive and we still think the market's actually not appreciating the risk of that enough, we're talking Fed funds rate going to 3.5 to 4, that kind of level, then a hard landing, that I think the market is probably taking a bit too lightly right now. So we're not saying it's over yet by any stretch. The markets are appreciating a growth slowdown. They're just not ready to bake in a harder landing. So I think that's where some further repricing is needed. But in the short term, valuations adjustments, weighting readjustments, we're seeing a bit of a risk bounce. But I think the Fed will have the final word on that.
Jeff, you brilliant, extremely important note, really pushing against the forget about the Plaza Accord consensus. Mr. Yu with BNY Mellon today. I can't say enough how alone Jeff Yu is on this call.
Yeah, a lot of people are looking for some sort of coordination in a way that perhaps cannot happen.
Landau, the Deutsche Bank leading the charge on that.
But frankly, it's hard to see how you get some sort of synchronized move at a time, as Jeff was saying, where people are moving away from each other and looking at idiosyncratic economies.
I'm going to tear up. My throat just you do this for 8 hours for 5 days, and, I lost it there. And Lisa, you saved the show. Repo, keeper of the Amex, is Swiss. He says, Tom, we staffed him. Reto's in charge of like the whole budget here.
Yeah, including the fondue.
Yeah, and the team here, I didn't know this. I hope I'm pronouncing this right. Reto, I hope I'm pronouncing this right. Regi Kirsch from Schweiz in Lucerne. We say thank you to Fassbend. Regi Kirsch. It's fruity flavor complemented by a subtle bitterness.
That's great, Tom.
It's great, yeah.
Thank you for that. I'm sure when you say, I hope I'm pronouncing this right, just for everybody, that probably is not right. Coming up, you keep practicing that. We're going to be talking about real estate coming up, which I'm very excited about.
Colorless.
Frankly, I know we're just having two different conversations right now, but in addition to the jobless claims that we get
for the last 5 days,
in 20 minutes here, we're also going to be getting housing data that will be key at a time when interest rates are climbing to the degree. Jonathan Miller,
how do you
always
say the
brilliant,
Miller
Samuel. He's president and chief executive officer.
Z-U-G.
I'm fascinated to hear what he has to say. Zug. I think we'll ask Jonathan Miller. This is Bloomberg.
Regi Kirsch.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's one of the biggest technology deals of all time. Broadcom agreed to buy cloud computing company VMware for about $61 billion. The transaction represents about a 44% premium to VMware's valuation before May 20th. That was the last trading day before Bloomberg reported potential takeover talks. The UK will impose a so-called windfall tax on the profits of oil and gas. The money will be used to help fund at least $6.3 billion of support for Britain's facing a cost of living crisis. Chancellor of the Exchequer Rishi Sunak told the House of Commons the 25% tax would be temporary. Senior ministers in the British government have long opposed a special levy on energy firms because they fear it will hurt investment. In China, Premier Li Keqiang warned of dire consequences if officials don't move decisively to prevent the economy from getting worse. Li told thousands of local officials a contraction in the second quarter must be avoided. His comments were more candid than the official readout published by government media. The massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. And Apple is taking a conservative stance when it comes to building iPhones this year. Bloomberg's learned the company is asking suppliers to assemble roughly 220 million of the devices in 2022. That's about the same as last year. The mobile phone industry has got off to a difficult start to the year, and production estimates are down across the board. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
There's no doubt that the fight against COVID in China has had an impact very short term on the Chinese economy. But China is very determined and seems very convinced that they will be able to meet their growth targets, and they're not right now accelerating their infrastructure investments. And when they accelerate infrastructure investments, it's good for iron ore demand.
He's the Chief Executive Officer of Rio Tinto, Jakob Stausholm, with a view from Sydney to Perth. Did you know Sydney's on the East Coast? Perth is how they say it.
Oh, I think that we're going to get people from Australia just writing in, being like, please never, ever say Perth again.
Rio Tinto with a step forward, I guess, with BHP Billiton and the rest. That would be Broken Hill Properties.
Oh, thank you.
From Sydney to Perth as well. They are, and I got the step is looking good right now. I looked at Newcastle coal. In fact, I mentioned Australian coal today. It spiked up so much, you can't even do a standard deviation study. Welcome to Davos, World Economic Forum. And right now, on these emerging markets, which are hugely represented in these meetings, Damien Sassower joins us in New York. Damien, I want to talk about what Rio Tinto's looking at, which is the moonshot of coal. Is your world adjusting to a permanence of higher commodity prices, or do you look at Newcastle coal from Sydney to Perth as a one-off?
I think it's turning the other way, actually, Tom. I mean, look, energy is one thing, but base metals have really fallen off, and you see that reflected in a lot of the emerging market currencies, such as the real and the South African rand and the Chilean peso, and many of those that basically go hand in hand with that. But look, you know, for me, the big story in emerging markets is going to be, on one side, you've got President Xi and his commitment to COVID zero, and you've got Premier Li Keqiang, who called in over 1,000 financial professionals just yesterday in an emergency meeting to talk about increased lending to households and to commercials. And if you're running a bank like ICBC and Bank of China, you know, it's like deciding which pitcher to pull out of the Red Sox bullpen. There's really a very small probability of getting a win out of this. So, how do you get demand?
Try to translate it for us. Damien, this is important, and I'm so glad that you brought this up because, frankly, the dichotomy between these two behemoths in China really highlights how people are wondering about the leadership and about the direction of a nation absolutely hammered by their zero COVID policy. What do you take away from this, and frankly, from the possibility that Xi Jinping doesn't have the clutch over the nation that he was expected to have?
Well, my takeaway is that there is a distinct political agenda here ahead of the October Party Congress, and it's getting very, very difficult for President Xi to hide behind that. You know, he is trying to get reelected for an unprecedented third term, Lisa, and I think that is his priority, more so than the health of the economy in the state, right? Because if he really was concerned about the economy, in my opinion, you'd be handing out cash. You wouldn't be trying to extend credit to people when there's no demand for it. You'd be handing out cash, giving vouchers, giving assistance, direct financial aid to households and companies who so very badly need it. And that's what's missing here in the 33-point plan, Lisa.
Yeah, but Damien, the fact that such a high-level official would come out publicly and so directly give a different tone than Xi Jinping, who is by all accounts going to be the leader indefinitely, what does that tell you about where the economy is and, frankly, what happens after the Party Congress is held?
Well, it's confusion. I mean, it's basically, look, I mean, Premier Li Keqiang is not going to deliver that address without, you know, full sign off by the president. So, you know, it's two sides of the same coin, and it's ambiguity, more ambiguity, and it's that which is really driving the decision tree at the top of, in the C-suite of most of the major corporate banks. I mean, how do you lend to small and medium-sized businesses if their business plans don't work, right? You know, you're going to be, you know, it's what you heard about China going back into the 90s. You know, they're going to be building towns to nowhere, railways to nowhere, bridges to nowhere. And I think, you know, something needs to be done to prevent that, quite frankly.
You just brought back David Tomlinson and Mary Poppins, a magical moment there with Dick Van Dyke. Damien Sassower, you're a font of culture. Damien, I met with the Minister of Finance of Malaysia today, and every time we talked, he was brilliant. He circled, plus he's a Liverpool fan. What is that about? And he circled back, Damien, he circled back to their commodity mix. Let's go to the heart of it. It's 443,000 miles from Sydney to Perth. Tell me about the commodity variable for China as they come out of lockdown. How do you analyze that?
Well, you know, it's getting increasingly difficult, Tom, and I'll tell you why. What China's been doing, I mean, G7 Connect, which provides, you know, real-time trucking data out of China, they've banned that data now from going out to the masses, and what you're seeing in China is they're really restricting a lot of access to high frequency data. So we really don't have that much more to go on. And I think that's a real concern. It just shows how bad things are on the ground, how deep, the slowdown is hitting, And so, for me, it's how do you kind of provide transparency in a country which is basically holding it back? As an investor, how can you justify to your fiduciaries making an investment in a country that's just, holding back data that's not giving you all the answers? And I think that's the real concern for me. I think that's the real concern for emerging market practitioners here.
Damian Sassar, thank you so much. An important conversation here on EM, which I would say in the market, Lisa, is out of the picture.
Yeah.
Except at Davos, it was front and center.
Very much as people try to understand where the marginal growth is going to come from if it's not going to come from China. Tom, literally that entire segment, you're just coming up with ways to keep saying Perth. Am I wrong?
Yeah, but what I don't understand, I read my Neville shoot and I watched On the Beach and all that. There's just this conceit that you say it's like in America, from New York to San Francisco.
Yeah.
They say from Sydney to Perth. That's how they say it.
I don't think that they say it like that. I don't think so.
They never say from Perth to Sydney. Do you ever do a road? I don't know. Do you do a road trip across Australia?
I guess we have to do that, right? I guess we'll do a full-on ABBA shoot. Honestly, we are about 5 minutes away from U.S. data, and I do want to refocus on that because, frankly, I do think that it will be telling. We're going to get the GDP reading for the first quarter, but more importantly, jobless claims.
If you do a road trip in Australia, like I did this in America, and you do a road trip, you listen to Grand Funk Railroad the whole way across America. What do you do in Australia? Listen to Rick Springfield?
No, ABBA. You listen to ABBA. What else are you going to do?
ABBA, that's Swedish.
Whatever. They had an Australian.
Sweden.
I don't know. Maybe you can ask Qantas. It can let you know. Can we get to the jobless claims that we're going to be getting in about 5 minutes' time?
Well, yeah, serious number here. And we're back to normal. That's what we're talking about.
Well, are we back to normal, or do you start to see the swings that are more significant as we do see a number of companies start to lay off staff? You're seeing that on the peripheries, particularly in
This is not like Bramo Gloom. You're saying statistically we're seeing math that says it.
I would say anecdotally. There are certain companies that hired, you saw Amazon with this, you saw Walmart with this, that hired substantially some of the warehouse staff and other personnel that are having to cut back.
What's the statistic that matters? What's the claims number where we go, OMG, it's over, we're all going to die?
It's just the pace of how much it increases. Do we move off of the incredibly low levels quickly?
That's an English major calculus you just did there.
Thank you, I appreciate that. English major.
Michael McKee, Michael Ferroli, everybody in the half hours named Michael. Stay with us from Davos. This is Bloomberg on radio and on television. Good morning. Good morning, everyone, from the World Economic Forum in Davos, Switzerland. It's a perfect day here, and supposedly it is a perfect American labor economy. But an important data point, our Michael McKee, our Bloomberg Economics and Policy correspondent, the weekly jobless claims number. Michael?
Well, it's not just the weekly jobless claims number, Tom, although that's important, but we're getting the second read on GDP. At this point, the jobless claims numbers are coming in at 210,000, which is down from the 218,000 initially reported last week. And that is going to be good news. There were some who even went as far as speculating maybe the labor market was rolling over, but clearly that is not the case. GDP comes in at negative 1.5%. That is a tenth of a percentage point lower than the 1.4% originally recorded by the government for the first quarter. The personal consumption index rises, though. We spent more money. People did 3.1% increase over the fourth quarter compared to a 2.7% increase. So it does look like the economy is still in decent shape, or it was coming out of the fourth quarter and into the first quarter. Now the question is what's happening in the current quarter.
Michael, the market's here pretty much stasis here. Futures up 15, and we'll see what the bond market does. Michael McKee, Jeffrey Yu, with an incredibly important note on the Plaza Accord, cites Jeffrey Frankel of Harvard University. And as you know, Michael McKee, Frankel of Harvard has been definitive on trying to figure out the definition of a recession. Michael, with all that you read, do you ascribe to NBER 2 negative quarters of GDP is a recession?
Well, that's not the NBER. That's just sort of a technical definition that appears in some textbooks, and it's not what the NBER says. The NBER looks at consumer spending and business spending and things like that. And it has to be a generalized decline in economic activity over a period of time for them to declare a recession, which is why they wait a long time before saying we are in one or not, because they need to get all of the revised figures together to find out if we have had that kind of decline. There's no way we're in one right now. There's no reason to think we couldn't go into one. We're not likely to. According to the latest numbers that we're getting, but right now we're not anticipating that this quarter will be a negative quarter either.
Mike, this was actually a positive downside surprise, right? Because you want fewer jobless claims if you want to see a robust market, or perhaps not. Have we gotten back to good news being bad news? I'm looking right now at some of the futures off the lows, frankly, off the highs, and you see yields near session lows, particularly on the 2-year note. Mike, what's your interpretation of this as people look and expect the Fed to perhaps be a little more patient than a couple weeks ago?
Well, everybody is, as you say, expecting the Fed to be a little bit more patient. It all came up yesterday in the minutes, which didn't tell us anything new. The Fed is going to raise rates 50 basis points at the next 2 meetings and then see what happens. And so it may be a little early yet to make a call on that in terms of what's going on with economic data, although new home sales and existing home sales have started to roll over, and we've obviously had troubles in the stock market. But as long as the jobless rate is this low, and of course we'll see next Friday what happens with employment, it's not likely that we're going to see the Fed pause, because inflationary pressures will still be there. And they did warn a lot in the minutes yesterday about the impacts from China and the impacts from the Ukraine war. So that's what they're going to be watching for. Clear, as Jay Powell says, clear and convincing evidence that inflation is going down, and the numbers we got today aren't saying that.
Michael McKee, thank you so much. Greatly appreciated here on claims. Claims come in a bit positive here, but that GDP revise a little bit challenging, to say the least. Right now, an immense joy is Michael Feroli, chief U.S. economist at J.P. Morgan, and the hallmark of his weekly notes written Friday evening, it comes out about 7 p.m., is you talk about going beneath headline analysis, and that's the J.P. Morgan team, even algebraic function. Michael, algebraic functions Friday night at 8 p.m. is a highlight of my Friday evening. What do your algebraic functions say about the American housing market? Units are grim, price hasn't moved.
So housing clearly is suffering a little bit from higher mortgage rates. And we saw that, again, with the new home sales that Mike just mentioned, as well as almost every housing point we got last week. And we would expect that to continue for the next several months, just given the lags between when mortgage rates go up and when home sales come down. That said, we're coming off, white hot levels, and so we're basically, I think, getting a little bit back more into balance. And it's likely to be the case that inventories, even with housing home sales coming off, inventories will likely remain pretty lean, and home prices, we don't see home prices declining, certainly. So hopefully getting a little bit more into balance, cooling off, but not 2006 by any means.
Michael, this question pains me to ask, but are people getting too gloomy as they start to price in some sort of slowdown that allows the Fed to be patient?
So the Fed, I think, will continue moving after, obviously, we're going to get the June, July 50 basis point moves. And I think to the point you discussed earlier, look, Chair Powell is an outcome-based guy, and he wants to actually see inflation and activity slow down. So while housing may be a leading indicator for the economy, I think Powell will actually want to see things slow before he actually pulls off the rate hike. So I do think that maybe we've gone a little bit, maybe we're thinking the Fed's going to be too gentle here with the economy, but they really have their work cut out for them, and so I don't see them pausing after July.
What are you looking for, Michael, as a sign that truly we are seeing some sort of slowdown with respect to inflation at a time when we're hearing from everyone here that the consumer is still very strong?
Yeah, I think you'd really want to see the labor market soften more materially than we have seen. Again, We don't want to see a lot of unemployment, but the jobless claims numbers that we just mentioned, those can suggest we're still in a very hot labor market. So you would like to see next week not only job growth slow, but perhaps vacancies come down. We'd like to see that happen, in a smooth kind of linear fashion. Generally, it's not the case, but that would be the ideal scenario where you have a nice slowing in job growth.
One of the key sentences I've heard here, Michael Feroli, is central banks that really don't have reaction functions right now. They're making it up as they go. As you and Bruce Kasman and your team piece together tomorrow's note, do you have a mathematical structure or a geometric structure of where we're heading, or are you as blind as the central bank?
Look, I think it's clear that the Fed is not operating and has not been operating by anything close to a Taylor rule or any other type of formulaic reaction function. So I think that makes gauging central banks here a little bit tricky, but that's been the case for a couple of years where you can do your implied Taylor rule and it doesn't look anything like what the Fed's been doing. So that's just a fact we're living with.
What is the fact we're living with? As Lisa mentions, to just watch the consumer. Is that the heart of the matter?
So the consumer matters. I think the consumer will follow where the labor market goes, and that's why I really emphasize the labor market. And we can talk all about excess saving and all that, but it's really labor income that's driving consumer spending here.
Yeah, Michael, that's Jamie Dimon on line 3. Pick up the phone, say hi to Mr. Dimon for us. Michael Feroli at J.P. Morgan this morning. I really can't say enough about the research effort they do. Robert Mellman inventing the weekly prospects as far as I'm concerned, and Kasman and Feroli. We are such nerds, Lisa. Honest to God, Friday night, you're sitting there with a beverage of your choice, and you're doing whatever you're doing, and you're like, 7 p.m., is Feroli out yet? Oh, hi, yes. How about the Red Sox? Is Feroli out yet? It's literally that.
Don't blow the secret. Come on. We're supposed to not seem like that's our Friday nights, but yes, that is our Friday nights, and I think everyone knows this. Tom, I think it's time for us to actually interview somebody who has really been a dominant personality here at Davos and has really been an incredible host of several different panels and really has a bird's eye view into the cross currents of many different countries, and that is one Tom Keene. What was the biggest takeaway from the panels that you did?
Did my agent sign off on this?
I don't know. You're going to get royalties. But I mean, seriously, we haven't even talked about
number
it.
One takeaway. And Lisa, you've been great about this. Lisa drives me nuts, folks. We can be talking Liverpool, Tottenham, and she's going, why aren't we talking about China? Guess what? Here they're talking about China.
That's the reason why I care.
This is the unspoken, the medical bet when the lockdown ends, what?
Yeah, and the lack of visibility into that, especially because the China delegation is not here. They are not here because of zero COVID. They are not here to represent and give some sort of intel about what's going on. How do you position going forward when that could be the potential swing option for what happens with the economy?
I'm going to combine two of our great bankers, our wonderful conversation with Brian Moynihan, which was, you got a wonderful, forget all this Fed chat. Okay, he was like banker nerd, wasn't he?
Well, you basically walked him into that. You don't care about Fed speak, do you? He's like, I guess not.
We received, he's down in the mailroom every morning. How many checks did we get in?
Yeah, exactly.
But you take Moynihan at Bank of America, very visible here, and Mr. Dimon in his 44-page love note, where they're just talking about hard work. And the other thing I think that's underestimated here is that every single company is going to adjust and adapt to the data that Michael Feroli's, I'm just not as negative as others because they're going to adapt and adjust as we move forward.
One conversation I had with a money manager who oversees a lot of assets said to me, the most bullish thing that I heard was all the pessimism. The gloom, just the uniform gloom, made me incredibly optimistic because, frankly, it seems like we priced a lot in. But then you hear from other people saying, perhaps not. I don't know, a slew of uncertainty.
I'm in the camp. Jonathan Miller, I think he has got like 42 rentals on the island of Manhattan. He owns 3 homes north of Manhattan and 6,000 square feet
scare him away.
in Racket Lake. John Miller knows real estate, and he's living large with these prices right now. He's going to come back and tell you when real estate breaks.
Racket
Stay
Lake.
with us in Racket Lake, you portage, 20 miles. The black flies are like,
oh no, please don't remind me.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. One of the largest technology deals of all time will turn a chipmaker into a bigger force in software. Broadcom has agreed to buy cloud computing company VMware for about $61 billion. The transaction represents about a 44% premium to VMware's valuation before May 20th. That was the last trading day before Bloomberg reported potential takeover talks. Today, Secretary of State Antony Blinken will deliver a long-awaited speech outlining U.S. strategy towards China, but there's unlikely to be any bold new direction unveiled. Instead, Blinken will explain existing policies. The U.S. strategy includes investing in democracy and innovation at home, bolstering allies, and competing with China on military and economic issues. Russia has cut interest rates for the third time in a little over a month. The central bank is hoping to stem a rally in the ruble and slashed its benchmark to 14%, from 14% to 11%. Despite the sweeping sanctions imposed on Russia, the ruble has soared to the highest level since 2018. Surging exports and capital controls have hit demand for foreign exchange. And Alibaba reported a better-than-expected 9% rise in revenue in the March quarter. Chinese consumers turned to online malls for basic needs during COVID lockdowns. Alibaba is a barometer for consumer sentiment because of its dominance in Asia's largest retail arena. The company is grappling with intensifying competition and mounting economic uncertainty at home. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The housing market has been chronically undersupplied. It is a key challenge. It's a challenge that there used to be a housing platform around, but that platform was dismantled during the Great Recession, and it hasn't been completely restored.
Lights out at Davos. Neela Richardson, chief economist at ADP, was fired up about the American economy. That was a valuable conversation.
Absolutely. Talking about the realities on the ground of people who are struggling with inflation and the housing situation, which is getting worse across the nation in terms of affordability.
Yeah, I was looking over here to see if the goats are gone. It's the Swiss Army's helping us out here, and they're tearing down as we tear on our last section in Davos. And of course, as we know, we can't afford anything in Davos to buy or rent. We might as well talk to Jonathan Miller or eat. Jonathan Miller joins us, president and CEO of Miller Samuel, to tell us when housing is going to crack in America. John Miller, you would suggest we're starting to see an ebb. Is that because people can't afford the rent? They can't afford the mortgages?
Yeah, I think we're approaching a peak. I think rising mortgage rates are probably one of the best things that is happening to housing. In many ways, low mortgage rates are making housing less affordable because it has obliterated supply, whether in the rental market or the purchase market. We're seeing, I cover about 40 different housing markets across the U.S., and the market share of bidding wars right now is anywhere from 25 to 75% of all closed sales activity. That is not a sustainable condition. We need more inventory.
Tell us about the mortgage rate right now. Are the people that did short-term mortgages at lower rates, are they already in trouble given that we now have higher and higher rates?
So it clearly places more pressure on them given how much prices have gone up over the last year. We're looking at, depending on the metric, around 20%. This next year, meaning 2022, more like 9 to 10%, and probably 3 to 4% the following year, even with the rate hikes. So all this is because there is limited supply. There's a firm underpinning. This isn't a financial engineering exercise that we had during the bubble. Credit conditions are still tighter than historic norms, and actually that's really pushing some people into the rental market, which is making it even less affordable.
Jonathan, how much is this a story of private investors and investment firms buying up a lot of the single-family homes and removing a lot of supply?
I think that certainly it's a factor, and it becomes more apparent when you're already in a situation right now where inventory is about is 1/3 of what it should be for a normal, stable market. But I also think it's overhyped as a contributing factor. I think the bottom line is that rates have been too low for too long, and you have to think of inventory as this living, breathing organism that takes time to recover, and it hasn't had a chance, and that's causing price growth that's just the likes that we've never seen.
And Jonathan, this is the distinction as people talk about 5+% mortgage rates and the idea that the actual number of sales is slowing. The prices still are going up. When do we see prices peak, Jonathan, and how high do mortgage rates have to go?
So I think that pricing isn't going to. So I think it's more about the rate of growth that we're seeing. We've been seeing in the last year a rocket ship, basically straight up. I think we're going to see a moderation. Look, affordability has fallen by half since the end of the year. Mortgage rates are up 2%. I mean, that's a rapid, sudden change, and that's going to slow down transactions. What's interesting is before the rate growth, sales were already falling, but it was because inventory had collapsed and was restraining sales activity. Now it's a combination of both.
Jonathan Miller, too short a visit. Thank you so much for joining this morning with Miller Samuel here. And as we come back to New York, I mean, we're at a housing point now. It's absolutely extraordinary. We've got to, close the loop here on a number of items that we have. First of all, on the goat farm, there were some serious people thinking I was going triple leverage goat farm.
Yeah, I know.
And I just decided the legal fees alone were just too much.
I think that you decided we should go to the triple leverage sheep farm because they are sheep, not goats.
I think that's what. I think we're high enough for they could be goats.
I'm sorry, they're sheep because they are chewing grass, not
This
leaves.
is what happens. There they are. There. Those look like sheep from here.
Let's
I must
hear your
admit.
best sheep ba.
No, I can't do that as well. Another big item we have is we have people here speaking English, and I can't understand a word they say. And Elisa's here. She's been helping us all week, and I didn't even know she was Australian. So on the break, I got a lecture, and it's just simple. It's not Melbourne like we say.
No.
It's Melbourne.
Melbourne. I can't
even say it. But she said I came close. It is Perth.
I know. I know you're
Perth.
going to be saying that for the rest of the year. Honestly, I think that this has been a really interesting Davos. I have been actually surprised at how serious people have been in terms of getting things done. And it's not just about paying lip service to different pet projects. It's definitely trying to roll up your sleeves and come up with where the financing is going to be.
Of course, all of us have maximum guilt about being away. It's like every night I'm just crushed at being away. So you got to buy loot when you go home. And thank you. This really helped out. Structured Credit Dad emailed in, and he agreed with me. He says Brandy Melville is just like, you're not going to be buying that on the way home.
So is that the reason why you're mentioning this, to basically excuse why that will not be in the loop bag? So what is it going to be? Toblerone with Davos on it? Sephora's not any cheaper. Anyway, just saying. But
no, it is not at all.
I will say, I honestly have been really impressed at how things have gone. And now we're going to head back to New York City.
We're going to go back. We're in London tomorrow. Looking forward to that. And then, within balance of power and what Joe Matthew's doing over at Sound on Bloomberg Radio, we go back to a really sad story we have in America.
A horrendous story that has desensitized people, unfortunately, to what happens in schools. And honestly, that schools prepare for this.
We need to say thank you to the hundreds in Davos that have helped us. Queen Victoria helped us. Did Anastasia help us this year?
Yep, and the sheep farmers. Yeah, come on.
Okay.
Thank you to all of you.
Thank you to all.
Welcome back to another special Roland Garros update for Bloomberg TV and Radio from Tennis Channel. I'm Jamie Maggio. Two teams move on to the third round, but in very different ways on day 4 in Paris. Coco Gauff continued to carve her way through the draw with an impressive straight sets win over Alison van Uytvanck. After losing the opener 6-1, the Belgian found her range in the second, but the American had just enough to edge the breaker to advance. Up next for Coco, Kaya Kanepi. On the men's side, wonder kid Carlos Alcaraz came through a 5-set thriller against countryman Albert Ramos Vinolas. The Spaniard saved match point before taking it deep in the fifth after 4 hours and 34 minutes, the longest match of Alcaraz's young career. And don't forget, Tennis Channel's daily live coverage from the City of Light starts at 5 a.m. Eastern. I'm Jamie Maggio.